Good morning, everyone, afternoon, wherever you are. This is the Jigsaw Live Trade Room educational webinar. It will discuss some of the techniques that I use, Stephen Kelly, to trade Eurex and also other products on other exchanges. So we'll get to the educational. There's a disclaimer there. I'll pull that off now. So we can see, basically, to start with, we have the bund here on this screen. The basics, we have a DOM, which is a Jigsaw DOM. You're seeing buying and selling going through, buyers hitting the offer and the sellers hitting the bid. We've got a volume profile. This is basically raw market data as we see it. This is a visual of basically what prices are traded. How I go about trading the bund is a little different to, say, the ES, scalping ES, or other instruments. Basically, in the bund, I'm picking up on order book anomaly, and I'm trying to locate who is in control, whether it's a buyer or a seller. I've picked up these anomalies over roughly 4 years of looking at the bund. So, but I trade them a little bit differently to, say, the ES contract. We'll take questions. I'll explain a little bit about what I do. So the basics, what I'm looking at, and then we'll take questions basically on what I've explained on the bund. So if you guys could just use the chat as we usually do with QQQ if you have questions for clarification on the way I trade the bund. So basically to explain a little bit about what's happened, and this is what I usually do. I'll let the market trade for a little bit if there's no immediate opportunity, so I won't chase a trade. Why I sit there and wait is I'm trying to locate who is in control, and like I've said before, it's a bit like reading a book. It's very hard to tell what's happening on the first 2 pages, but once you get in, the storyline becomes quite clear, and I'm applying that same principle. Basically, we had a gap up, and where it was sold down 44.30 on Friday, we've traded back down off that. As a side point, when it comes to creating levels, whether they be previous volume profiles, support, resistance areas, areas that are sold, range areas, I don't necessarily put huge weight on history. What I'm trying to do is get a feel for what's happening now, which is reality. So the closer I can read this, and the better I do that, the more money that I make. So I'm pretty much putting myself in the opportunity loop by looking at what's happening now, and that's where having the Jigsaw tools is very important. In terms of combining the actual DOM and the numbers, the data's going through here, and the tick chart, basically control, if you see it now, we can see that the sellers are driving this down. Oh wow, look at that. The sellers are driving this down from 24. So we'll just move this across. There's a slight issue with the DOM. So it's just a decimal point. So we'll just take into consideration this number. This is basically the first two there. You can see that the volume going through, the sellers are hitting this. Basically, what you don't want to see is any tickbacks. You want to see light volume if you're on the sell side. So when you approach an area like this that's obviously bid before, for this to continue on, if you've shorted in here going with this, you want to see a continuation of pressure on this side. You want to see pulling here. You need to see real seller aggression. You don't want to see a buyer hitting the offer with size. So they're still moving this through. I'm just checking the numbers. You're seeing the volume profile. So we have a big step, 22. There was a little two-way trade at 26.27, which was up here. So it's basically exploring the downside at the moment. So that's basically combining DOM and tick charts. So you can see that we're coming off. So this is in terms of tilt, we have selling and we're on a sell leg, and you can see that by the movement, the volume that's going through. It's not very thick, but it's moving quite easily. It's not something. There's 408. So if you're holding shorts in through here, then you can be quite confident. If it keeps ticking off this, you don't want to see it tick back on heavy volume. You don't want to see aggressive buying with size hitting the offer. That's not what you want to see if you're short. You want to see tick highs contained. So this is what I'm looking for. In terms of anomalies in the order book, basically most times the guys that trade the bun, the bigger guys, they'll usually control a market and they will go market to limit orders. Basically their limit orders they'll place at structure highs or just beyond, and they'll use that to liquidate into stops. If you don't see anomaly, which would be, say, a price level where there's heavy limits, it could be 1,000, it could be 1,500. If you don't see that on either side, and you see decent buying and selling, it's likely two-way trade. There's no real control, but I like to see a market. I'm trying to locate control, which would mean that if we're going down on heavy volume, it's nice to see heavy limits below. So basically the guys that are shorting this, controlling the market lower, they're liquidating in at lower prices, and they're usually done, if you compare the prices on the DOM to structure, they're done off and on structure lows if it's moving down, and off or on structure highs as it moves higher. So that's what I'm looking for basically. In terms of habits, good habits to get into, it doesn't matter what you trade. It's knowing data releases for the day, so you really need to understand what's coming out, where are your risks. You don't want to be in a trade before a massive, say, an interest rate announcement or any of those things. So always get into the habit of doing the same things. You can see on this there's a bit of volume ticking back. It's quite heavy there. So if you were shorting through here and you saw at 18, and a lot of people worry they get no time. that they're worried, like, where's it going to stop? You don't need to. The market will tell you. That's 19 and 18 were very heavy hit. Now they're hitting 21. So shorting through here, you have warning signs on these two prices that you shouldn't no longer be in your short. So don't ever worry about, oh, where do I get out? What do I do? You're trying to stay with reality in the moment. You're reading what's happening now, and you'll take ticks according to that. And this is what I say: if you align with reality rather than trying to put your wants or needs on the market, and you shorted through here and you said, my TP, I want to take profit at 14, and the markets, the buyers are hitting the offer 221 and 121 and 260, then you're never going to get 144.14. It's not possible. You can see it was a fairly decent rip. You can kind of see now in balance there's nearly 3,000 and it's double. Someone's at 32, which is off structure highs, with 904 on the limit in the limit book. You can kind of see this is what I mean by control, a very aggressive move back to the high. It's kind of, for me, this has got a bit of long side bias. I won't trade today. This is an educational webinar. It's to explain the way I go about this process of reading the market real time. It's very hard to educate and trade live. So it's just purely for educational purposes, for new guys that are interested in the room to get a feel of what goes on and how it's done. What I usually do, if I ever get into an area that was sold or bought before, I'll clear out and just see what they're doing again. We can kind of see how important a profile is. We're back to this volume. There's a step there, 24. So you're looking at this basically all day. You're seeing how this interacts. Why I like the tick chart, because I can tell where a node is. Up here, for instance, if it's flipping 28s, 9s and 30s, I can tell it's doing volume there. It's just a byproduct of spending time trading prices. You know there's going to be volume there. What can happen is if you don't have this, you can lose these points inside this. You'll never see them. They're in there for the day. So this is why I use this. In terms, you just have to be careful when it trades away from volume nodes like this and comes back. It can provide support or resistance depending on your perspective. So that's why basically combining the two is very important. I mean, you can just trade off a DOM alone. Having a chart alone there's no information here other than a visual. You would never see until after the fact that there was buyers stepping in 18 and 19. We saw that it was heavily traded in terms of what buying went on before on this leg, and that signified a reversal. You're also outside these lows, so they've been swept off. So I'm really combining everything here. You also want to take into consideration, you'll find now it's 20 past 8, so it's basically 20 minutes after the Eurex open, and you see the pace of tape has really died down. And this is another thing I look at. It's more important, say, if you're scalping a faster pace market like the ES. You can get a very good feel through pace of tape of how a market's trading. And you'll see it's died off right now in the bund. I don't necessarily use pace of tape here. This is just pure order book anomaly and buyer or seller control. I'm just trying to pick that up. You can see now there's 1100 up here, there's 700 here, they're just off the highs. This is starting to grow. You've got 2742. There's a common theory that price will go to volume. It's not always the case. You don't treat that as a 100% given rule. I know other markets it doesn't work so well, say the ES. But I know with the bund, the way they operate, the bigger guys, the guys that are trading 1 and 200 per clip, they usually, if they're controlling, they'll go market to limit. That's how they work. If you don't see heavy limits, like I said, it's usually two-way trade. You just probably working a range, value area for the day. Even they could be working an area. In terms of context, there's a 1 hour chart here. It doesn't matter too much. They're just purely for data points to see where we've traded, how we've traded. I don't put weight, like I said, creating a bias in terms for myself and my own trading. I don't like to do it because I don't shift from the bias very easily. I can get stuck trading that. A lot of people can throw that out very quickly. But I've found that if I put myself in line with reality and just watching what's happening in the market, it's much easier for me to adapt and change to what's happening. I feel a lot more in control if I'm trading in the now, rather than picking something like this saying, I'll sell this because it's resistance, when the market's clearly, the buyers are in control, they're hitting offer, there's limits at the highs and it wants to go higher. So in terms of biases, I don't create any biases in my own trading. Like I said, it can be a big problem for me, but others can adapt. I'm not saying that you can't mark levels, have previous volume profiles or composite profiles. They're all useful tools, provided you let the current market, dictate what you're doing. That's very important. And like I said, you're using the jigsaw tools here. You're seeing weight into the bid, weight into the offer, control, anomalies in the book. These are the things you look for every day. And like I said, different markets, you can't apply what you're learning here to trading corn futures or pork bellies or crude oil. It won't work. There's different participants, specialists, guys that specialize trading crude oil. They don't trade bund necessarily, well, not actively. So if you can pick up in your own market, whatever that may be, the way the bigger participants operate, their modus operandi, if you can pick that up, and you'll do that through time, watching the DOM, watching how it trades. So that's very important, and it doesn't matter what you trade as long as you understand your market, in terms of all the things I've been speaking about. In terms of the Eurex, you'll find once London opens, which is basically an hour into the Eurex session, London will come online. Volume will increase. You can see in terms of size on the bid offer in the book, they're quite, there's a few levels there that are a little bit heavier, but most of the time 100, 200, 300 are basically the size till London come online. Then you'll do 5, 6s, 7s, and then over 1,000 for anomaly if you're picking up levels. In terms of the limit book, I've found a lot of the times, if you've been running up on say this, on a leg like this, and it keeps working higher, you'll basically find as it keeps taking these highs off, the limit book on this side will get ridiculously stacked. I've found 8 times out of 10 that when it's ridiculously stacked or massively skewed, you'll get a swing reversal. You can pick up these types of things and it'll come off. So sometimes just waiting for a trade, reading the story as it trades along, is sometimes a very good way to take a major swing move in the opposite direction. In terms of tick backs, these are the types of things I'm talking about. See how it's ticking back and doing nothing? That's kind of buyer moving this higher still. The buyer has a bit of control here and the seller isn't aggressive on these tick backs. They're very light in terms of numbers. If you're selling this, you kind of don't want to see what's happening right now. There's risk that it'll run higher. But like I said, you keep reading this, you keep reading it. This is the only thing I think about right now. This is the only thing that's concerning me. I'm looking at they're stacking higher. They're 4 6s here, 2 7s, and quite large orders out these highs. There's 100. So this is what I'm saying. This would seem an area of resistance, but you have to read what's going on. Tickbacks not heavy. Buyers hitting offer with decent size being the aggressors. We're off the volume profile here. There's 23. There's a huge ledge there. So we're kind of running off here. This is basically, I use these columns for delta. This is a running balance. So it's just totaling. And that's what I use these 2 columns next to the volume for. When you're in a trade, the only thing you should be concerned about is just managing your risk and being adaptive, reading the market constantly. You should be looking for feedback that you're wrong in this long. See, that's 118, but 102. You just keep reading it. You're looking for signs that you're going to be wrong here if you are pushing out long. And if you can do that, then you keep yourself in the opportunity flow. You give yourself a chance of reducing any risk. So your losers will be quite small. You'll be able to run your winners out. Like I said, the bun's not, if you compare the bun to say the ES is very pacey through price levels, and the tape where the bun's quite subdued. You're basically in the bun, you're looking for control, so size, that's what you're more concerned with, not so much the pace at which it's doing it. It's a lot slower in the way it trades. It's a fixed income market, although being a volatile product. So what I'll do now is I'll open up, if you guys have questions on what I've talked about, just put them in the chat box QQQ and I'll address the questions. So whatever you want answered, so just have a think. If you want anything clarified, just let me know. Basically, after we talk about this, we'll move on to how I trade sort of a faster market like the ES using structure, and we'll talk about that a little bit. Also, in terms of using the actual profile, like I said, Pete really endorses this, a move out and then back in. you have weight there to lean on. And any trade, really, what you want to do, you want to lean on the volume or the weight. If you can get that to happen, and then trade low risk areas in terms of a profile, or like I said, back into these areas, they're a very good trade. Basically, it's important to understand that we're not pattern trading. You want to get out of looking at the market in terms of patterns or moving averages or trying to trade a system. That's not what you're doing. You want to see in this and understand what's happening in here. In this box here, there's two-way trade. I know this was Friday's and it's gapped up, and it's basically that volume there's capped this, and it's driven back lower. If we look at that in terms of just about one, it's the same session, same trade. There's no gap. You're seeing buying and selling here. There's two-way trade. Once prices trade off, then anyone that bought in here is likely to liquidate. They're not going to take that risk. Guys that sold in here, they're likely to press, and you get these reactive moves out of these clustered areas. It's just purely on that alone, but if you understand the concept of market microstructure, its participants, they're interacting, where the risk is, the skew for that, then you can take very low risk trades. You take very little heat if you understand what's going on. I'll talk a little bit on the ES about lean and how you can pick up in these areas whether this will hold or not, and where the risk is, whether the risk it'll go higher, or the risk is that it'll trade off lower. You never know. You can't sit there and say, well, it's going to be down, I'll just sell it. What you have to be doing is looking inside this area at what's happening in here, basically. And you want to be seeing what prices are traded. You can see that there was lean on this side. It was leaning. It had a bit of negative lean on it. It wasn't, the tick here was 29, didn't do 30s, and suddenly we're doing 7 and 8s, and then we're off. And then you get that unload of any buyer in the top here looking for an extension. You're just taking advantage of that, but you will get signs if you're looking. If you just trade off a chart, you're just taking a chance. If you can see what's happening on Jigsaw and seeing what's going through on the DOM there, I know Pete and Jigsaw has a few other tools. They've got recon tapes and summary tapes. I basically just use this. I'm an X-Trader user, so this is enough for me. I just used to look at the DOM, and like I said, an anomaly in the book, and just see the size it's hitting the bid or the offer. So you can see in terms of this, a bit of weight through here. We're back to the bottom end of this profile, quite a nice profile that's building in the bund at the moment. But definitely sort of caught inside a range there. We're sort of range trading. So we've got a question there from Benny. He wants an explanation of how the two leftmost red and blue columns are formed, the deltas you stated. Basically, Benny, these are a running total. So if someone was to hit into this now. I'll do a reset, and we'll watch what happens. There's one on there now, there's 4. Now someone's hit 1 into there, which makes 2. It's just a running total of what hits until you reset. This will be cleared once the level ticks on through. So, but this will give you a running total. These will stay until you clear. In terms of delta, how I would use this a little bit, or what you could do, if you were to take this level, for instance, and you saw heavy selling in here, and in terms of delta, lighter buying, and prices started shifting up, then the guys in here are at risk that we run higher again. And they're likely to liquidate, so that's going to cause also pressure to the upside. If these guys get caught in the bottom, again, I'm trying to understand what happens if you sold 19, or anyone else sold 19 with size. They were putting effort in, and they couldn't drive price lower. That's just risk. It has risk to the upside that if prices start printing higher, these guys are likely to unload. So that's how I'd use that in terms of delta. And they're just running total. As you can see, this doesn't look like this, but this is just adding in. Every time we get contracts, it'll add in. That's how that works, Benny, if that answers your question. But in terms of using it, I want to see very heavy effort on one side, and then the risk is that as price prints against this, then the chances are they'll liquidate. They couldn't drive prices lower. Also, if you look at what's happened here, there's only been one contract traded, and this is the edge. You can kind of see whether they're aggressive to push the price lower or not. It's kind of something, if you saw and you thought maybe I could take a breakout trade, they're doing a lot of volume in an area, the risk is lower. They've been running this low on control. If 19 starts to go heavy, you could see if you could get an edge there, sell it for a run on down. Like I said, you're getting this area. This is two-way trading here. That there's buyers and sellers. The buyers may be happy to keep it. They may feel that price will project higher. The sellers are also happy. There's no major moves yet. It's pretty wound tight. So moves lower, the buyers in here, it could cause a flush lower. It's the same as it moves higher. So you want to see what prints just off these ledgers. It's very important to see. And like I said, I'm looking for that all the time. I'm looking for that all the time. What price is doing on any tick backs. If I'm short here, I'm following this down, and it ticks back. It ticks back. You don't want to see heavy size on the tick back. You want to see heavy size on the way it's ticking, and that's reading order flow. And you just keep with it, keep with that trade, working that direction until it'll give you clues as to its reversal. So in terms of what's happening here, this is a very good, and like I said, this is not based on yesterday's profile, last week's low, 4 years ago's midpoint. It doesn't matter. We're basing it on today's trade because the specialists, they're trading for today, the guys making the market and trying to profit from all this. They're trading today, they're getting a feel today where they're doing business, what they can and can't get done, how easy it's going in a certain direction. They're picking all these things up as they interact with the market. Like I said, we've got the bottom alleged there in the profile. That's basically 19. And we saw before we had heavy buying up through here. If you're long and you're looking for this to work out higher, you don't want to see heavy selling. You just have to keep an eye on this. Are they aggressively selling? If they are, then the risk is it works lower. And like I said, you'll have to, and I do it often, that you may have to clear. You just clear if you want a good read of what's happening. Just clear. 4.1, so a little over 4,000, and this is 3.2, so it's a little bit heavier on the top side. We've got about 20 minutes to London, so you're just keeping your eye on all things. In terms of internals, I watch the yen a little bit because the yen is a risk-off instrument, so that's the bund and the yen like to go the same way. I look at the 6E contract, so the euro. It's a good indication of risk on, risk off also. They're the two major currencies. And when I'm looking at the bund, I also have euro stocks and ES on other screens. You can get telltale, lead, lag. You're just watching across the markets that if you're getting long the bund and everything's working, then the yen you'll probably find is also being bought. You may find the euro stocks sold. You can't design a rule and put it in a perfect box. It doesn't work like that, but you're just getting a broad view of the market, the internals. Are they moving money into fixed income and out of equities? Are they buying yens? It's just, it can give you an understanding of risk on, risk off, where the participants are shifting the money. I have some questions here. The DJ, could you go over how you use the columns with the negative numbers? Okay, it's good. Basically, in terms of negative numbers, you can see this now. If I get a pen, they're stacking. You can see icebergs too. I'll explain something about icebergs and what I saw the other day. So if they're running down and they're pulling, sometimes what you'll find, and this is an example, if you see control, you see heavy this side, and they're working it up, and you'll find it's quite light here in the limit, very heavy here. If the guy's looking to liquidate in here with a limit order from these longs as they hit the market and it's moving higher, you'll sometimes find that they'll pull it on momentum. If they feel like it won't do 25s, it could even get to 30, 31s, they'll pull these and they'll push them higher. So you're basically using this for pulling and stacking. Like I said, you'll also find manipulation. Sometimes you'll get this quite heavy and then they'll pull it. You'll get impatient traders trying to get over that, and the guys controlling are just wanting you to come over and hit them. A lot of guys will lean on this thinking, well, if I sell it and hit the market on the bid, get short and lean on this volume, what then happens is they pull it on you and then it runs higher, and they'll keep doing that because they're on this side. If you see 3.2 and 5,000, it's a little bit skewed. It's a little bit skewed. We're trading in the bottom here, so longs out of this area aren't a bad trade based on what I'm seeing in terms of what's going through. and 4 years of experience trading this, picking up anomaly. You can see they're stacking this now, so anyone getting long here will stack. Now they're pulling. That's basically what you're using this for. Like I said, you can use it for manipulation. Big orders will get put in here, then they'll pull it. You've got to understand why would they do that? What are they trying to accomplish? Because someone's doing it for a reason. They just don't do it because they're bored at their dealing desk. They don't do that. They're trying to game a little bit, so understand. And if you look at it all the time, and this is what I'm saying, I spend most of my time on the DOM, 80%, 90%, and only a little bit on these. This I'll just look at. It's just 1 second just to see where we are. These guys here, it's the same thing. You're just seeing, but it's basically all of this, then some of this, then a little of this, and barely anything of this. And that puts me in the loop of now the reality if I'm looking at this. You can see they're pulling here, and like I said, as it ramps higher, if they got them quite close, they feel they can get a lot more out of this. Maybe some sellers are going to release out of here, so they'll pull it and they'll stack them higher. And if you think in terms of what you would do, if you saw it racing higher, you would think, I can get a lot more than that. You find that other markets will be slightly different. If you looked at corn for 4 years, you would find that it wouldn't do the same as the bun necessarily. Okay, that answered your question. Very good. Is there any more questions, guys, on understanding this, how I would use a column? Why I have the things the way I do? Duma. Basically across the curve, like I used to trade spreads, so I looked at the bobble and the shats too. I basically just trade outright now, but you'll find most times, I know, say in terms of if I looked at the bobble, you can see obviously a difference. They could be buying the belly of the curve, not so aggressive on the back end, which is the 10s. It can vary. It's not, but if you pulled up a bobble 3-tick and a bun 3-tick, they're similar. They're similar. Obviously, like I said, it depends. You're obviously a spread traders picking up differences in the curve there, but so there are differences. You obviously will be out. Maybe the 5s aren't as strong as the 10s on the day, but you usually find they're pretty close. But I don't necessarily look at them. No, I'm just trying to read the bund in terms of order flow, and I'm looking at the stocks and a few other internals there. Both of these, in terms of charts, like I said, context, this is a 1 hour, you can have a half an hour, it doesn't matter too much. I just have it so I can see the structure basically in context. This is a 3-tick range. This is a 1-tick range, so they're not actually tick charts in terms of, I think I may have confused a few guys in the room initially over that. It's actually a tick range, so every time this would go 22, 23. Once it breaks that, it'll form a new bar. I'm just having it basically, I have this for volume. That's why I like it. I can tell that through these prices there's volume, even though it could be lost in the actual profile itself. So that's in terms of the charts. Thanks for that question, Pete. And it's also similar on the stocks and the ES. I just use those same parameters. You can kind of see here the buyers are really trying to get this moving. In terms of delta, 1,000 there, 500. In all these levels here, there's more buying going on, but ask yourselves, can the buyers shift this higher? You need to keep that in your mind. If you think in terms of skew, it's skewed on top. The risk is that it goes higher. If you have a lot of money and you can control the bund, you like to get paid. You don't want this market going against you. Look at the tick backs. There's nothing on the tick back. So it's something, if you're trying to short this, it's just not a good trade. So we've got 605. Do they pull, or is it traded? If it's traded, it's quite strong. As you can see, probably only people jumping over now. Looks like uninformed traders. There's one gone there. Still size here. That's the VPOC for today, by the way, is 22. I'll just clear this. So in terms of what I'm seeing now, see the tick backs 22. If you clear, as it's pushing out, you can obviously it's pushing out 1394. There's buyers trying to get this happening. Keep that in mind if this fails. Like I said, in terms of delta, the buyers have every level from 20. But look at the size on the tick back. That should be telling you something. 21's a dip 1, 22's 4. There's no one willing to smash this on any tick backs from this. We can see in terms of structure, we're out above the cluster. If you look at this, we're out above, pushing out. You also see what I talked about before of lean. You're seeing lean, it's doing 19s, barely did it. And it come to 20 twice very quickly, but didn't do 19. Suddenly, it's doing 21s and won't do 20s. This is what I'm talking about. You're taking that as an easy 2 ticks, just reading in there saying, if I hit 22, I can see that I'm with lean, I'm with size. It's traded 24, so you took 2 ticks in here just purely by reading what's happening here. You're just reading it going with something, it's leaning out, what it can and can't do, and the size it's hitting, control, delta. It's very easy to take a few ticks. And you can do this all day. You get an area where you think, I have no idea, just sit there, reading it. Suddenly you get in the loop of what's happening. Then you take your edge and you take the piece out of the market. Like I said, still skewed 5-4, 3-4 is 2,000 in terms of where they're positioned. 32s, they're off highs. If you look at this one, there's nearly 900 there. We've got 700, yeah, just also outside the highs. So on the highs, you'll find they do that. They'll be on the high or just outside. If you look at the way price moves in terms of structure, if it's going a certain direction, whether it's down or up, most times they like to wash these lows off. They wash them off. It's where they take profit. They're selling through here. They'll liquidate in the stops from guys long on here. And it happens all the time. It's a very simple way to tell market direction, where they're taking the high or the low out. It's a very simple way to tell which way is the right side of the market. And a change in that. I'll widen this tick out and explain that. A lot of people don't understand what way should I be going, what way is the right side. It's very simple. In this leg, they're taking the lows out and they can't take highs out. This wasn't taken out. It's not taken out suddenly. We're taking We're taking these highs out. Lows weren't taken out. Now we're taking the highs out. The lows are intact. The direction is higher. It's a very simple way to tell what side of the market to be on, because the professional, the guys who are running this up with size, controlling these legs, they liquidate outside a high. So you already know immediately, the professional trader, these specialists, they're running this higher. And like I said, as long as you stay in that loop, reading through the jigsaw tools, then you're trading reality. You'll make money. It's just a byproduct of doing that. Yeah, I have some rounding issues there. I don't know. That's not normal. That just happened this morning. I don't know what's happened there. Could be on my end, but that's okay. I had to widen the column out. Otherwise, you just see 7-1. So that's not a problem. So I've just a fixed Brad. So if you're looking to get in on a move or a leg, obviously there's two types, and this is another thing I talk about. It's very important. I'll touch on this a little bit while we're here, but it's market condition. A lot of traders, if you're trading a system or some type of pattern, you can miss this. You can miss this simple thing. But if you look at this market here, and we'll call that market A, and then you look at this market here, we'll call that B. It's a totally different condition. If you're going point and your legs, I know Pete has an indicator on Ninja. I think it measures the size of a leg. It's a very good idea. I just do it. I've done this for years, and I just measured them. I measure them just in terms of ticks. I just do them off my head. But you can see point, very volatile leg. It doesn't look like this. It's not flipping. It's quite fluid, and it's quite volatile. What you need to do is to pick up on the condition that this has changed, because a lot of guys say, well, I'm taking 1s and 2s ticks, I'm doing fine, and then I get ripped and I lose 7. Or why didn't I know I could have taken 7 here? The market will actually tell you, that these tick charts will tell you basically when it starts to trade loose, don't take profit of 2, 3 on the bund. You want to be going 6s and 7s, 10s even. Once it locks up like this, you want to be working 2s and 3s at the most. That's all you want to be doing in this working ticks out of the bund. And like I said, if you're not wised up, you can apply. You can take B, all your rules on B, and you push them over to A and trade it the same way, and you're not really trading reality, because in A, the market isn't B. And until you bridge that gap, you're not going to be taking all you should from the market. So I know that would be a problem with a lot of retail traders, and it comes back to reading market feedback, picking up on the condition of the market. How is it trading? Is it volatile? Is it point? Is it flipping? What does my structure look like? Is it doing this pacey? Is it going quite quickly? Did this happen in 5 minutes or over half an hour? But we're doing these ones in an hour. How is it trading? So you're picking up on that as you go along. And basically, if you know it's changed, then you can change how you trade it. Don't trade it the same way, say, in B as you would A, or vice versa. You change the way you trade based on the feedback you're getting. And that's how you'll make more money too. But that's the reality. That's trading in line with reality. There's a bit of two-way trade here. There's a bit of size both way in here, 2 ways in here. But it's okay. Just pull this one back up. It usually resets. There we go. We'll just keep that on 30 minutes. We got that back, so that was good. So I'll clear this and I'll just reiterate what I was saying here about limits in the book anomaly. I'm still picking this up. You can see that 26 was the high. 257, they're back on it again. This is the bottom of the profile. It's not a bad place to go for a low risk long, providing they don't hit 20 heavy. Then you need to cut your risk. 350. You don't want 79. You're kind of reading this. Like I said, if you're long, working 21s, looking for it back to the top, you're skewed. It's higher on the offer side. Are they stacking and then pulling this? 180 goes through. So at this point, if you got long here, you'd be probably trying to reduce some risk if you saw that it wasn't it's not doing any size on this tick back. You kind of need to take one or two and just beat the door. It's already ticking off. We're off the step at 21, and this is what I'm saying. You're just keeping it tight. But you're seeing what's traded. Another thing you'll notice too, and it has nothing necessarily to do with the numbers in the book or what's being traded. Sometimes you'll get a spread in the level and you'll see buyer coming up and then you'll pull down again. And then you'll see the seller come down quite easy. So if you remember before, see it's really, I'll just clear this, it's still heavily stacked on this side. There's 24s now at 26s. You're looking at the size. If you're working a pull-up, see how it's going two-way? It's just a bit of a heads up. It could be a light reversal. It could be continuation. You're checking size on this. You're checking the size. They're 21s now, so they're really coming inside the structure. With these limits, if you look at the limits, they're coming inside. 24s, they were off the highs. See how it's working back into the thin? So you don't necessarily apply that rule, but I know that it's heavier on the top here. But we are working through this thinner side, so you can't necessarily say, well, the price works toward the heavier, because it doesn't. So you see they're pulling 16, 175 traded there. We're back to a volume cluster here, a bit of a pivot through 13. It's kind of not that you would go long, but you're just keeping an eye on this. Are they going to keep hitting this side? But this is a sell leg. It's a sell leg. In terms of tilt, you also got, you'll hear me talk about that. So you can see through the midpoint of structure, you got negative tilt, and you're also on a sell leg. So that was working all the way through there, and you're just looking at the order flow. But I don't use this technique so much on this, but you can. I use it on the ES and stocks a little bit more. 22s, 23s, 900. See, they're back. That's a fair bit of size there. So you're kind of sensing some type of reversal in here, and I always clear. I just clear everything. If I find an area that I want to watch, they've pulled 22s, 3s and 4s. See how they had them in before, but now they've pulled these. You'll see this is being trimmed out a little bit. This is starting to even up. Move these over. See, now we're 4.6 now. This side's actually slightly larger. I usually have this on 15 too. I'll just change that. Eurex offers a little more. So you got that, what you can see back further. So in terms of looking at, and this is what I say, don't necessarily hold it as weight or written law, but you can see that this level through 13, 12, there was a volume traded here, then we got out from this and we got back on top. Now we're kind of trading back to these areas of pivot through here. And at these points you want to be checking in here, you want to be checking in here. Are they still hitting it into here? How's it trading in there too? Is it really aggressive and fast, or is it slowing right up? You're just taking you're basically just watching pace of tape. Like I said, not so important on the bund, but it's something I really like to watch on the ES. So in terms of fading, I mean, some guys fade, it's part of their nature. I'm a little bit that way, but I'll also try and go with it. I'm just trying to see who's controlling and then try and go that side if I can. In terms of fading, this is kind of what you want to see. You want to see two-way trade. If you can lean on something. And then all you're looking at is you make a trade, you manage your risk, and then you read the market. Like I said, if you're long in here, 17, 16, it doesn't matter. If you're long in there, you don't want to see size on the tip backs. Like this is great, 15, 42s into 16, 17. I mean, 237, 315. If you're long, it's great to see. I notice there's heavy limits right on here. Which are just off this tick high. There's nearly 10,000 to 7, still skewed. It's being skewed this way all the time. It can be a little bit of a heads up too if it stays skewed and it's falling. I'm always a little bit cautious that it's going to reverse. If it, like I said, if price is coming down, it can definitely go towards the side with lower volume, but I'm always conscious and have that in the back of my mind that this is still staying skewed, which it kind of reeks of a reversal at some stage higher. But you just keep an eye on the book always, the anomaly. You don't, like I said, don't do this on the ES so much. It's just purely what I've picked up trading the bund. The stocks are moving higher, so you've got basically at the moment on terms of this leg, you've had the stocks running higher and the bund running lower on average. So they're working according to the normal relationship. ES is trading back to electronic highs. It's 1810 half, 1811s are the highs. You get to an area like that, that's not a problem, especially if you get Asia or London. A lot of these US markets can range trade. If you pick those ranges and then look at Jigsaw, see what volumes are working out off there, use a tick chart, try and trade under a volume cluster and lean on that cluster. So there's quite size hitting the button now, 741. That's not little. It's done 1213 at 18. So if you're feeling like we could have a swing, we've got that skew. If you've got heavier limits, it's not so much in here. I don't see out here. It is a little bit 700s, 800s. It's a little bit higher from about, it starts 26s. So we're still off these highs here. It's a little bit, it's not ridiculous. If you notice, those thousands that were in here are gone. But skewed. You just got to keep that on your mind. If you're selling, keep selling it down. It's skewed. The skew's not down here, so you just be careful. They're buying with size. So it was a decent long just based on that. Just saying, well, it's skewed. I'll just go in the direction of skew. I'll wait till the lows are washed off. I'll jump in when I see size. You could have lent on 18, got a 19, and traded 21. There's 2 in there. You wouldn't have got a 21 yet. It's 52. You would have got filled there. So it's pretty easy ticks working off. You've got an unwind of this. The shorts in the bottom have popped. If you think in terms of delta, who's where, you had 600 there, 400 in the bottom. So there's quite a few guys caught underneath this. And now there's just nothing sort of ticking back in terms, if you looked at that. So that's another decent trade like we had in here, where you're taking 2 ticks. You could have lent on that. And like I said, I didn't use history so much. I'm just using now. Like I said, if I had to place an argument on this trade, what I looked at was I noticed the anomaly that I usually see over 4 years. The book, the limits, it was stacked on the offer side. It was more heavier. Price likes to go towards there because guys control. They'll limit higher if they're buying. That's one argument. I was already off the lows. We're back into these pivot areas, back into this volume. There was a lot of good things going on here, and then you see this and this, and then it's quite easy to take 2-3 ticks out of the market. That's a scalp. You just take that out. When you saw, like I said, 217, 131, and you've got an 18 or a 19, you're not still in the trade. You shouldn't be in the trade. You can kind of see in terms of, like I said, what to expect on your legs. it's done a 19, and this is, you're just measuring what it's actually doing in terms of what you can get, not what you want to get. So you want to basically mark that 19.25 is a 6. You've got 17.24s, 25s, so it's a little bit more than the 6. You've got 19.25 is 6. It's done 25.14, so it's 11. 22s, 15s, 7s. So that's in terms of what you can get. And then you're looking at other things. Okay, we're off the bottom. We've got negative tilt. We're back into this volume area. Don't get greedy. You already know you're off on the tick high. It's going to push back into here. Don't expect one of these ones looking for 30. That's not trading current market condition in the environment and trading on feedback. That's rubbish. You're just taking a small 2 or 3 out, and you do it again. It's interesting to see what's happened here. Still skewed. We got adding here, ISIS. They're pulling in here, and it's done 1,093, not shifted. Where's the risk? You're back to volume again. You're seeing what's happening through here, back on the control. It's easy enough to take a few ticks just on that alone. And like I said, I just built up a few decent points that we could trade off. Like I said, heavier in here, 1696, not getting it done. In terms of delta, it's a decent trade. You're back to volume. You're back to this cluster. Look at what happens in here. No, sellers can't shift it lower. The risk is it goes higher. Still skewed, 8,000 to 6. Long side. I'm looking long side. And that's edge. That's how you get your edges. You're just leaning on what you know, your experience. We're back on, like I said, there's a lot of good things happening here. You're back on the bottom of the profile. Basically 7/18s. If you got a 17 or an 18, I mean you're out 20s. It's at least 2, and that's being conservative. You could have your runner on. You're thinking, well, why not? I just don't want to see heavy hitting in here. I'll put a break even on it, and that's, you're basically trading, the current market. That's reality. Adjusting yourself as you go along. You've got tick highs. It's ticking out. So you're checking those things that indicate strength, but still off on the ticks, on the tick highs. 152, I'll just clear out. Whenever I get jammed up like this, I'll always clear out. If I'm at a decision point, I'll clear out. Always just to see, but we're getting a very tight range happening. 23.17 is where it's all being done now. So this is a recorded session as an educational. No live trading will be taking place today. It will be made available, I think according to Pete and I, and our conversation will be made available to members. That's a definite. Subscribers to the actual room. So it's a good. It's a good educational to look over if you kind of don't understand some things. A bit of review. So it'll be made available. So Benny's got a question there. When entering for 2 to 3 tick target, what is the amount of risk you are willing to take in terms of ticks? I'm pretty flexible, Benny. Like I said, based on it's based on market feedback, what the market's been doing. Like I said, if you have, in terms of what's happening here, if you start to have volatile legs, or it starts doing these, if you notice this leg is not this leg, it's very different. This is flipping, working, but flipping higher. This is just pure unwind. So what you really need to be doing is you're being realistic that if you buy here looking, not that I would have, this is just purely an example, if you buy here that you might not get out so quick. You might not get out one or two. You might buy 27 and not get the market to flip you out, although you're leaning off on the tick highs. You know you're already under pressure. Like I said, I wouldn't buy 27 just purely based on that. But if you did, you've got to realise that if it's been wound up here, it's just a loaded gun ready to go off. And once it goes off, you might not get flipped back. You might not get a scratch or a 1 or a 2. You might have to take a 3 or a 4. So always be careful of that fact, that if you start to wind up in an area, it gets very tight and there's a lot of volume. Like I said, in 28s here, if you look at 28s, we did 2,000. That was up here. I don't know what portion, in terms of delta, what that was in there. But obviously a buyer, he had to liquidate. It just got pushed lower. Stops, whatever went on there. Like I said, I can't tell now. I don't have live data running through Jigsaw to see the sales, but yeah. So you just have to be careful of that. If I'm trading in an area that's starting to flip, it's been working here for quite some time, it's really been going two-way and it's doing a lot of volume in here, and you take the low end, you've got to be careful that if it goes, you might not get a scratch, or 1 or a 2. You might have to take a 3 or a 4. And then in a condition like this, you might decide to get short here and only take a 1 by the time it leans out from you, and just think, well, I'll just take 1. So if that answers your question, Benny, it's based off market feedback, what the market's doing, how it's traded, and this is what I impress upon everyone: don't trade patterns, trade to understand what's happening. When it does one of these things, you know, one, there's volume. When it does a cluster, there's volume. There's volume here. When it does that, understand. A lot of guys would say, oh, when it does this, I just shorter. Don't trade like that. Trade to understand. If you can understand, you have a lot more confidence. If you see leaning here selling this, you know that if this goes, you'll have a lot more confidence taking the +7 ticks than getting a wobbly wheel and just taking 2 or anything like that. Understanding why it would unload like that, or why you're not going to get much off this, or you can get very confident. You can expect a certain amount of ticks after a while. But that's basically trading market feedback. You know all the time what you can and can't get, what you're likely to lose if you get stopped. Yeah, exactly, Benny. It's just a manual thing. I don't just place a stop. So it's all, I mean, I'm trading a thick market here. I wouldn't necessarily do this if I was trading crude, but I wouldn't order flow and try and pick up on order book anomaly trading crude oil. I wouldn't do it. It's just not something. It's not a thick market. You need volume. So my methods here basically Pete the same with his ES. You need markets with volume. They're a lot easier. You can get edges there because you're seeing what's traded. It's very difficult if you're trading the DAX or crude and it's just doing a few contracts and it's very thin. That market I would absolutely trade on stops, because it can shoot so much further than what you even think. You can get caught in a cascade where there could be stops below here, and suddenly you're out. You stop 12, and then it's trading 5s or 6s, and still won't slow down. There's no volume there. There's not like you're leaning on weight. There's a lot of weight in here, Benny, on both sides. So you're basically in a market like Bund, Bobble. the 10s, the treasuries, ES, Euro stocks, you're leaning on the weight. You've always got the weight there. If you can see this again to impress, we've got stacking again, massively skewed, not half but close, 26s, 9s and 30s, so out on the highs of this. You can kind of see that now. You've got volume building in here now, ticking off highs. You've only got to get this to go and those will get the fill. Any guy buying in here will liquidate at profit. They've just got to keep the hammer on. If they can support it, they might not get the job done. The market may be too heavy and you'll get a big reaction off this. See the selling 17s. Can they do 16s? 19 so far. I'm looking if there's risk that it's going to go down. So there's no strength on 16. Then we're back to 18s and quickly. So we've gone 16, then back to trade at 18s very quickly. So you're looking at all these things when you trade. Centering. But 17 is the ledge. You can tell a lot of effort. 1026. It's half. 727 also again. More sellers. No one's doing 16 other than 27. 150s. So there's a bit of effort in here. 240 by the seller to try and shift this. Could be buyers taking risk off as it ticks off. They may think, well, we're off on the tick highs as risk. And if this, like I said, this is a loaded gun right now. It's just loading itself. Yeah, I'll have a look at that, Pete. That name I cannot find. So we'll just watch the bun here for a bit, guys. So in terms of risk here, if you look at this, it's ticking off the highs. We're under volume, 17s. It did one at 17. If you just clear, see what it can and can't get done. Still heavily skewed up here, which is kind of, yeah, I'm still leaning long side. So the stocks are still rising, which is putting pressure a little bit on the bund, the Euro stocks. So I always keep an eye on this market in the equities, ES, Euro stocks, when I'm trading the bund. So it's barely doing anything on the tickbacks. If you're short, these are the kind of things you want to see. You want to see good volume on here. This is good. Clearing. So they're pulling here. No size being traded as yet. Because if you see the book now, it's 8. And it's almost back to even again. They've pulled all these. These are the type of things you have to keep looking at this, what's happening. The lows have gone. We're back on this volume high, this pivot 13s. Size at 600. So if it's the type of thing, if you want to get long, you can lean on this, 15s and 14s. But this is all gone now. Clearing, centering. So we'll look at this for half an hour, and then I'll go on to the other technique I use for more pacey fluid markets like ES. And we'll look at the methods I use there just to scalp, but that's more active scalping. The bund, I'm kind of not very active, but you can take scalps. I mean, you can take trades out of the bund more upon thinking it out, and not necessarily sort of relying on the pace of the tape to get feel as well. But still, if you look in terms of volume here, where we did that volume there, we're under it. It's still ticking off, doing size 319. So other than the two at 14, 15, there was 600, 400 in around here, I think, buying. There's been nothing yet. And again, like I said, it's if you're long, what are they doing on the tickbacks? You're checking this side. Once it feeds up, you're seeing once it flips back, what's it doing? Is it doing size? No, it's good. And if you see size on this side, then it's just a perfect situation. You can see where we're channeling off there, so we've got negative tilt. Just been sliding. Your order book's almost back to even again. Jacob, I'm doing a bio at the moment, writing a bio out. So anyone that's sort of interested in you, it's basically my journey from A to Z. So when that bio comes out, probably it might be in about a week or so once I've written it. It might be like a page or so that you can read my journey and sort of how it went, how I got this far, and you can read all about it. Like most people that start retailers, it's the same journey as you guys. You get caught in certain loops. You may have a break for a while, 6 months, but I mean the passion never dies, but stuff doesn't work. You go back to the books, you analyse, you look again, you try and search for the right places on what makes sense. You may read a lot of books, psychology books, books on price action systems, order flow, tape reading, you name it. I mean, I've spent probably over 10,000 hours looking at screens and DOMs and charts, and then you add up all the hundreds of books you've read and the forums you've been to, and it's a long journey. I just wish there's rooms around like this that could help me actually understand, not sell me a system, not give me something, but help me to understand what's happening. And then not only that, help me to also realise too how important it is to for ways to put emotion at the door. Trading psychology, I'll cover a lot of that in the room, because that's just half to profitability. That's half your journey. The other half is understanding the market and how it works, and just managing your risk. Okay, that's good, Jacob. So Benny's got a question: how do you size your positions? Will you have runners? Do you also look for larger swings? Absolutely, Benny. Basically, you're always trading multiples. I'll always endorse multiples. It's not so. Basically, when it comes down to trading market condition, and this is what I'm saying, in some circumstances I'll go all in, all out. I won't say I can get a runner on this because the market's telling me I can't get a runner on this. If the market's giving away 2-3 ticks, I take 2-3 ticks and I do it on everything. I don't go to fantasy land thinking I'm going to make 10 when the market's only paying 2 and 3. What I mean by that, if you get caught in an environment like this, or it starts to chew out in an area, and it's basically, if you look top to bottom, there's not much in there, and you're in and around here, and you're doing 2 or 4s or 6s or 20s or whatever that may be according to multiple, you'll hit all in, all out. If you're on a major swing point, sometimes I'll go in light, only because sometimes I like to take the highs out. You'll see that. You'll see this. They'll take the high out, but usually, like I said, I'm picking up with a massive, in terms of a reversal from a high, a massive stack on this side. Ridiculous. It's just skewed ridiculously. Like there might be 7,000 down here and 20 up here. I usually pin that as a major reversal, and I'll tiptoe in, because it could, you could get the grind happening in the high. So I might not sort of go full weight. So I'm very, according to what the market's doing and how I expect it to trade and my experience, then I'll manipulate my contracts. I won't necessarily have a hard and fast rule. If it starts opening up, like I said, you have conditions like this where it starts getting volatile, then absolutely you could take 3 or 4 on your first and see what could happen on the rest. I mean, you may take 10 on the runner or anything like that. It'll also depend upon where you are, and this is why I have context, and I use this guy, that if you've had a volume cluster here, you've pushed out, you can profit on this, lay back, add another, and then just let the runner, providing you stay above a certain area, just let it run out for the afternoon, expecting an unwind. You can do that as well. So, but I'm using 3 tick and sort of 30 minutes to see what's possible, and to see where we are. So if that answers it, but it's basically you want to trade that based on market condition, what you can and can't get. A trap that most guys will fall into is we start to trade an area, and it might be something like this, and they're looking for plus 10 ticks on a long in here. Now you may get it, but the market's just trading quite tight. If it gets up to here and you see decent selling volume coming on here, you're best off going all out. And that's trading market feedback. If you see an area where it's heavily wound up, it's like a loaded gun, well, you're probably thinking, well, I can take 3 or 4 on my first and I'll probably get extension maybe to 10. I mean, this is 30 here and it's 19 here, so that's 11 in here. It's giving you an idea. You're just checking what you can and can't get. And like I said, if you popped yourself over and traded pork bellies for 4 years, you'd know what you can and can't get. And that's important. That's trading according to reality, not you get caught in a fantasy land where I've got my TP at plus 10 and my stop at 5. That doesn't work. The professionals don't trade like that. It's totally irrelevant. You're just putting your own perception, your own wants, your own needs onto the market, and he really doesn't care what we want or what we need in terms of TP, stops and all of those things. So you have to adjust yourself, and that's what I basically do. Like I said, point to point, in this here 16.21, that's 5. But if you look realistically, are you going to get filled on a 21 if you bought here? No. Are you even going to buy 16? No. So you're looking now, out of the 5, you're only looking at 3 to profit on if you're good. So that's what I mean. If you pick up on condition like, wow, it's flipping, it's quite tight, even the point to points, and these points aren't getting filled on much volume, you've got to be realistic. You've got to say, well, I'll take 2, 3 at the most, and I'll go all in, all out under this condition. I just don't know what it's going to be. If you're buying here or buying here, the reality is it could do one of these, and you get stopped out, and you lose all the effort you made. So, but you're constantly reading what the market's doing. Obviously, if you have a runner on, and you take the first one off on 2, 3 ticks, if that's all the market's giving you, then that's good. If you think you can get more based upon how it's traded or a reaction or something, then obviously you keep monitoring the market. You keep checking the live data. Is it working? Where are my tick highs, lows? Is it ticking off if I'm short? What's it doing on the flip backs? Is it doing nothing? That's good. And as long as we're hitting volume on this side, if you're short. So obviously then that never ends. It's not some perfect number that you can apply. You have to adjust yourself. Jacob there, what value is the tick chart on the right? It's this guy here is a 1 tick range. So it's a range, not a tick. It's a 1 range chart. So basically 24, 25, once you get an excursion from that one tick, you'll print another tick. You get an excursion from that one tick, you'll print another tick. I have it to get volume cluster or a pause or how it's trading, whether it's volatile, point to point. You can see the cleanness. You can see the cleanness. I can pick up on the condition, whether it's starting to let loose and get volatile, or is it locked. That's what I'm trying to pick up on. That's why I use the one tick. It's just basically prices. It's just like looking at this guy here and seeing what it can and can't do, but all I have it is visually, which is much easier than trying to remember what it can and can't do in the DOM. You need a very good memory. So again, see how we've dropped off. Now we're back to stacking. I'd always be alert of that. I'd have that in the back of my mind if the market kept going down or heavily skewed on one side with heavy limits at varying prices. And if I was getting short, it's okay to do so. But see how even this quite loaded up in here, but it just never made a very big excursion. And they've been going this side all morning. The skew's been, in terms of moving towards the volume, it's been skewed all on this side. It's kind of like it wants to go over there, but it's just struggling at the moment. You've got 16s, 17s. You're basically talking the bottom down here in terms of profile terms. And if you look at a chart, that's where it is. The 16s is basically the bottom. You tried a few times. It was very quick out of there, if you notice. And this is what I'm saying. You're reading everything. This is not just one thing you can say. Look at the pace out. It took an excursion from this bottom at 14, and it just went straight back up to 19. It's quite a volatile leg. And then you got this here at 16, 17. So you obviously got, it looks like you're going to get one of these ones, a push out from a channel. You're kind of just reading it as it goes along. You don't need to jump in and get too hasty with anything. Just keep doing the numbers. What makes sense? What are they doing? What side should I be on? Where is it also going? Like a lot of guys, they probably never trade the bun. I'm just telling you on 4 years of looking at this, what can happen. Like I said, don't wander over to pork bellies and try and do the same thing. I don't know. I can't tell you, but you can get edge by picking up little nuances in your own market, whatever that may be, whether it's the bobble or the silver, or it doesn't matter. So you're talking in terms of volume now. It's in here. In here. So once it starts getting away from there, you're kind of leaning on this. If you bought 18s, 19s, 20s, and you're looking for it to go up off these highs, 23s, 6s and 30s, obviously some ones, you know, they're still heavy there, 27s, they're all off the highs. Then that's where you're looking too. You can front run those areas. If they're heavy 24s, you can front run and liquidate 23. It's the same at 30. You can do 29s, 28s. You can just front run those levels. Another point I touched on Friday, I wasn't well all last week. I had a shocking time. I had a bug, but another thing I discussed in the room on Friday is coming between. What I don't like to do is put myself between. This is just control. This is what control looks like. There's no one on the tick backs, only little. So if you ever get this and you see heavy limits, it could be starting at 27 to 30 and they're pushing this up, and you decide to sell here at 24. You decide to sell that and get a fill. What you're basically doing, I'll just change the pen color. What you're basically doing, you've got the guys on this side controlling, pushing up, and they want to liquidate in here. They want to liquidate a profit. If you come between what they're doing, you'll take heat. they'll move up through you to liquidate at a profit, and you'll take heat. You'll take heat for wherever these limits are. It could be off the highs, and this is what I'm saying. You're much better selling off a high. Don't sell inside the structure. Always sell off the high. It's the same with a low. You have a low there. Always buy off the low. Don't buy in here necessarily, because they'll profit off or on lows where the stops are. So you're coming between them. They'll just move it through you. They don't care. They're controlling the market. They want profit up here. If you sell it and you're between business now and liquidation, you'll take heat or you'll take a stop. And that's basically how a retailer would work. He would say, oh, I'll buy it here, but doesn't realize that under here, change color again. Actually, I'll clear it. So a retailer may say, oh, okay, we have a double bottom, I buy it, get a reaction. But what he doesn't realize, if you can see a sign and they've stacked the limits underneath here, then the chance is you'll take heat on this. It'll go below you. So if you bought 15 or something like here, once it's down here, and there's heavy limits, they'll cross you, and then you'll be out. You'll get stopped, or you'll wonder where's it going to go, or there's just that risk there. So that's thinking in terms of a professional. Where's your risk? What are they trying to do? Where's the control? If the controlling party's buying this, moving it higher, and they're liquidating on the limit, and I go and get between them, you're just putting yourself right in the middle, and they'll cross you to profit. That's how basically they make money off retail. You don't want to get caught in that situation where you're between them. I guess if you put it into the terms, you're getting between a tiger and his carcass. Don't stay well away from doing that. And like I said, I know where the carcass is, and I know where the tiger is, and I don't go and whack myself in between if I feel it's not a very good reason to do so. The only reason I'll do that is if I see it ridiculously skewed on one side. And like I said, at a swing high like this, you might get this number here. It could be like 20,000, and then underneath here it might only be, I don't know, 8 or something. And that's just heavily skewed. It's likely that even if it goes off there, there's so many limits in there. If they're not pulled and they're stiff, it's just the top. You can take heat on it. They're just going to sit there all day and sell it and liquidate, and then you'll get a move off there. And that's when you get these, like I said, these huge swing points. You get them a lot in a day. I mean, it went. This is Friday's trade. It went from 32 to 03. That's only 30 points, and then it goes and nearly does it again. But you'll find if that anomaly in the book, most times it'll pay you. But if this wasn't 21 and it was like 8 to 12 or something, it was still mild with, it might skip a few levels and do 1,000 or 15. You kind of find that they'll keep crossing that, so don't sell it until they're done. If you're looking for a major swing reversal, and it's just a matter of being patient, but this is, seeing here there's control, you know that the buyers have this, and you'd lean on 17, that's where all the volume is, so anything 17, 18, 16 is fine to buy, and you want to see movement out through the highs. As they take the highs out, obviously you're on the right side of the market. See 2s, 6s, they take the highs out, they'll liquidate. I've noticed now that some of these limits aren't in there, being pulled. There'll be a recording of this then, so and everybody else, it'll be made available. What I'll do shortly, I'll shift over to the stocks and the ES and explain a little bit about how I trade those ones. We can see that the stocks has come off from a 30.55 high. It basically locked up, did a 4 point lock up at a high, and now it's trading under that volume lock up. You obviously see it's helping to lift the bund. So that's how I'm using that two-way. You can trade either or. You can see the lockup in the stocks and trade the bund, or you can do it vice versa. You can see that the bund is being bid, and then you see the stocks, and you can sell the stocks based upon that. It just gives you a lot more confidence. I'll explain in a minute what I mean by that. And then I'll move over to the ES for guys that do trade that session. They may be, you may live in Europe or do a very late night, whether you're in Australia or Asia. You may sit around for the ES and do the morning ES trade, which is a decent trade. It's basically what I can hang around for sometimes. So that's a little bit of how I trade the bund. If you wandered in yesterday and opened the bund chart, and that was the first time you ever looked at it, you wouldn't know any of those things I just spoke about. And like I said, I'm just picking up on order book anomaly every day, and it may change after a while. But I know most of the time they'll go market to limit when it's moving in a direction. If there's no skew in order book, most of the time, if they're going heavy both ways, they're going markets, and they'll sit aside. They may put limits in later, but usually if it's very even in the book and it's also very heavily traded in the middle here, in these two boxes, they're just going to market. They're probably not positioning on a limit yet. They may even be just going market. But you can see through the numbers here the risk. If you're shorting this is not a good thing to be in if you try and short the bun right now. It's moved off the bottom. It's moved, look, almost out through these channel highs. It's doing size here. Tick backs are nothing. That's reading order flow. This is basically how you do it. You're using structure. What's it getting done? Where's my tick highs? On the tick backs, there's nothing. Pure control up through here. And just leaning on something. You're just leaning, oh, now we're out above. We're out above this. You're taking longs, leaning on these guys. And like I said, 17, 16 is the end of the road. You don't want to start to go buying long in here. 102, this is just clean buying. Not fast paced, but like I said, you won't get it in the bun so much. This is, the ES would be different. You would see a bit of pace in taking levels. It's quite fast. You'll see the difference if you ever put two DOMs up, one in the bun, one in the ES. But just stalk your trade a little bit in the bun. You don't need to. Just realise what's going on and also what you can lean on. If I want to get long here, I see control. What can I lean on to lower my risk? Where is my risk? The risk is if I get 17s and 18s, 15, anything, if it starts doing size at 16, I probably need to take 1 or 2, which is not a bad trade really when you look at it. It's ticking off highs. It's ticking off on the lows. It's going up. It's doing all this. Now it's starting to do size here, 374. That's pulled. We just see if they pull this. Looks like they're trying to get sellers to come down and take it from them. Sometimes you'll get light icing on here. They won't spook the market. They just might put 200 on there or something, just to support. It's just a bit of just support the move. $12.42 limit offer. Just see if it's pulled. or size takes it. Pulled. Not too much traded there though, keeps ticking off. You can kind of see the bund is going higher, don't stand in front, there's no reason to. Even if you see 1 or 2 or 300 here, there's nothing's invalidated the buy leg here. The tick backs are barely doing anything. If you're long, you just sit there, just be cool about it. There's no reason to panic. It'll tell you well in advance. So just go with it. Sit there, read the market, but make that your sole purpose. Don't, and this is another thing psychologically and emotionally, don't ever stick anything up that you can see how many ticks you're up on the trade, or how much money you've made so far already, or how many losers you've had this session. Just get rid of all that junk. You're just looking at this, and you're taking good setups, you're reading it, you trade according to market feedback, and you get the ticks, and you have a look at the end of the session how you did. You'll have a good feel of what you're doing, but do not think about that. Your job is to read this. That's your sole purpose as a trader, that, and to manage risk. And if you do that well, you get paid every day anyway. So you're just leaning on this, it's just grinding out long. Still skewed. It's been on this skew all morning, and you could have been taking longs just based on that. And like I said, the excursion from this down here, I was still well aware that this was skewed up there. It was like that all morning, so I'd be very careful of taking shorts. Like I said, into this, you had a few ideas there you could put together. Then you're just using the volume, leaning on heavy areas to take pushes on the long side with structure. You're seeing control, you're reading the market, you're all over this. There's no reason that you're not going to lose on a trade or be shaken out. Just sit there and be patient as it works out. The bund is not one of those things. I like pace of tape. I can feel uncomfortable on the bund sometimes just with the way it trades, but you're looking for size, you're looking for consistency, for thickness in these two sides. That's what you look for in the bund. Not so much the pace of what it's doing. Got a question there from Benny. Can you try to explain when you get in aggressively at the lows highs, and when you wait for more order flow info and get in worst prices? Yeah, good question. Most of the time, if I got an area like this, and it's a decent area to look out for. It just really is. Like I said, you had a cluster here. This is as an example. You got it pivoting through here. It comes back and it does it again. So, like I said, the first 2 weeks, I'm not sure if you were in the room, Benny, but you can trade touches. Basically, it's a method I used to trade when I was trading crude oil or the DAX. I'd pick a price based upon where I would say the stops are or where it's a decent level, and I just put an order in well in advance. Once I get filled, then I'd start reading the market. I'd need it to bite. I'd need things to happen quite quickly for me. I'd want to see positive things if I was trying to get long, like I said on this pivot. Same over here. You want to see positive things, and like I said, if it does 12s, what's the volume on 12? I can't see it now, what it was doing in here or here, but it probably wouldn't have done much. You want to see then what's the follow-up on this side as it pushes up out through here. You want to see what's happening there. So in terms of being aggressive, you can trade a touch. You can put an order in there, but like I said to the guys, I'll usually go half on touches, because that's all it is. You're not getting confirmation of tape. You're just picking an area, and it could be anything. You could have a cluster of volume here. You could have an excursion to here, and then pick the center of this volume or even the lower point and put a limit in here to sell, a limit sell, and put a limit sell in here when this comes up and hits it. And then what you're doing is straight over here looking to see whether they start smacking this side. That's what you want to see. If you get the fill on the limit and it does one of these and bumps around a little bit, and your edge starts to erode, because it's the same reason for this. You just want it to touch your area, get in best price. And most of the times when I do that, I'll limit a few levels. I'll pick 27 and 28, and I'll go half-half. It's the same thing down here. You might, I'll go 12 or a 13 if I'm picking an area that I just want to go half, and I'll trade it on a touch, and then I'll monitor the market. It's not necessarily let's come down here, let's read the market, let's sit there and see if this works. Because sometimes, I mean, like in this case, a 13, it might have just been very quick. You can tell the way it ticked up through back to 19, it was quite quick. So then suddenly, well, I could have got a 13, but waiting for size to come in, 14, you might only get a 14, 15 or a 16, which leaves you with a bit more risk. But you're doing so basically leaning on the whole idea down here. So you just have to be flexible. Like I said, if I pick a level, I trade a touch, I trade a limit without confirming, I'll go half. It just makes sense to do that. Then what you can do, you can add the rest when it starts to confirm and trade off and get an average. You might get 15, 16s and a 13 on the touch, averaging sort of up here. And absolutely, the other thing, like I said, I'll just clear this. When I see huge order book anomaly, when I see it massively skewed one side, I kind of can feel a reversal in the wind. Then I'll start working it, and I'll know that when I start working this on the leg, you can get a bit out of it. So you can leverage that leg. You can work any prices based on what the tick's offered, tick back into volume or touch trading, just working off this skew, because you know if you have a fresh skew and it starts working the leg, you can get a fair bit out of it. It's just not going to go 5 ticks. And like I said, heavy skew, you're talking, you know, 3-4 times what's down here. And like this is 7 to 10. It's kind of, it's not, it is going up, you can see, but it's not heavily skewed for a swing. So it depends. It depends upon what you're trying to do. But the safest way is actually picking an area that you want to do based on something. I mean, if you trade this way, you're just working out of history a little bit. This was Friday's trade, out of volume, come back to volume, and rejects any further downside. Pretty aggressive out through there. And then today aggressive again. I mean, yeah, it's going to pay you anyway. It's going to pay you. You're just going to be 1 or 2 ticks. But like I said, you'll get volume. You might not get a 12 or a 13, but by the time it gets to 14, 15, you just see size. You see good solid size through here. You can lean on that a little bit. So if that answers your question a bit, Benny. You'll give up a little bit, but you'll have confirmation, I guess. It's a little bit safer, but if you pick an area and you like to touch trade, just monitor. Just say, I'll do a 12 and a 13, but I need to be careful because you could do one of these on me. And then just get out. But that's the risk you take. No problem. Thanks for the question, Benny. Thanks, guys, for the questions. It's good. What I'll do now is I'll run over how I'll move over to the Euro Stoxx screen. So it will be screen 2. I'll shift that over in a minute and I'll explain a little bit on that method. I'll do that. I'll do that now. I won't clear that. I'll center. So basically what we're doing here, like I said again, this is a 1 hour chart. I'm not making any decisions based on this. I'm not saying, well, that's a high there, it's a double top I sell. I just know that outside these swing points there could be stops. I'm just marking point for point. We're tracking lower. I don't make any decisions based on that, and I have no biases based on that. So that's basically it for that. Then same again, it's a 3-tick range with a 1-tick range. The 1-tick range, why I have that, a lot of guys will think, why bother? This is a top there, you just read the order flow, right? I'm using this for lean. He can give you clues, and what I'm saying is the pace through the number. If you go, if you see this, it's quite. See, it never ticks back, and it went from 38 to 46. It went 2 ticks. It went quick. I'm basically using this to see how quick it's going through. It'll show you on here. If you look at the DOM, it'll tell you how quick it goes through the number. But this is a visual. It's quite easy to track. It just makes your job easier. This, you're just seeing the numbers, the weight that goes through. This just tells you what's happening. Like I said, there's lean in any of this, and like I said, this is basically. I'll just shift this over a little bit, and I'll shift the tick out a bit and explain. In terms of anything, and this is what I say before, don't think in terms of a pattern. It's not about patterns. Patterns don't make money, and they won't give you confidence. You need to understand the market and what's happening. I'll give you. I'll break this down from the start. Basically, in terms of this, so you can use the same principles on the bund, like you saw this morning. It was tracking off lower the bund, and you had negative tilt. It's the same on this. If you see that through there, that's tilt, or that's what I call it. The tilt is negative. You see up through here, if you look through your averages, it has positive tilt. You see that it's tick lows, not really taken out, just moving high in general. But this is a fairly decent leg in terms of tilt. That's positive. So that's tilt. Then inside the tilt, you can get legs. So you're talking 1, 2. Then you basically come off here a little bit. Then you got 1, 2. They're legs. So in terms of getting on the right side of the market, how it's moving, you can see you got negative tilt, and you got a leg here, 1, 2. Basically, you got two-way trade. You can see it locking up, and then what you're doing once it locks and it loads, it's loading. It's loading itself. There's two-way trade. There's buyers and there's sellers that are interacting, but one is going to be wrong, basically. This was kind of a nice trade because you had tick-off highs. It had lean inside this actual block. You had lean in the block. It was already telling you it wanted short side, regardless of anything else. You can just see the lean was off. It was doing 57s, then it went 56s. It tracked off in here, doing the lows. Then it did 53s, still on the lean. It just wanted the short side, and then you get a decent release off that. So that's basically how I'm trading. And if you're on leg, basically 1, 2 is the leg. You don't know, but once it starts to break, then you're on leg. So you've got negative tilt, and then you're on leg, which means it's just a perfect scenario for making money. And like I said, if you apply this with the ES and you just have a rip day and you're on the right side and you're leveraging that, you can make ridiculous amounts of returns in one session without even trying. You're not thinking about making ridiculous returns. This is about process-based. You're trying to get on the right side of the market at the right time, if you know what I mean, and you're using an understanding of how the market works, the interaction of buyers and sellers. Where's the loaded guns? How can I take advantage of someone on the squeeze? I'll clear that. Basically here, so you're on negative tilt, it locked up in here, so you did a fair bit of volume, then it went out below, but you see the risk now. We're out the top side of this cluster, so you can lean longs out of there, and it's just decent trading. you're out off the back of this. It was a rejection. You had this move up, then it failed. You had this trend, which was negative tilt, and then it failed on the leg. It's taken 40 out. Anything long above here, you're working out off the back of this. So if you're long 41, 42s, then your risk is very minimal. You've got 38s and stuff. There's just a few tick risk. I mean, this went to 55. So there's more than 10 in there, and you've got very little risk leaning on a failure. Like I said, I don't look at this in terms of a pattern. I look at this in terms of buyer and seller interaction, that the seller wanted this to go down and it rejected on him. And then basically you get a whole lot of sellers in there that are needing to bail. And then all you do is you look at this guy, this chart, you're picking up edge on the tick, you're laying limits, and you're looking at this guy here, looking for solid move up through here. In terms of, and this is another obvious thing, and people worry about, well, I don't know where I should take a profit. What do I do? Where's it going? Do I need to know what happened yesterday and mark that line in so I can take it off there? Don't worry about it. The market shows you. This was 54. If you saw, we did a lock up here. We had a decent move higher. Then we had a lock. Then on here it started to get on tilt for a move higher again. But see this here, there was no one really getting into it. It did a 55 at 113, and then it did 1,070 at 54, which is right here. So if you were long in all this, you would be liquidating. If you were looking for a short and you saw 1,000, 510, 52, and you're seeing the lean on the tick inside there, I'll bring that up in a minute. It's not showing, 955. No, it's not showing. I'll slide that across so you actually see what I'm talking about in terms of lean. So there's the high. That's basically this is this. You can see we moved in terms of volume, and this is what I say, lean on it. Once you get down under, you can see all the cluster of volume here, and now we're under it. The risk is that this has failed, and now you're working off under the volume. So you lean on that, take shorts 51, 50s. You kind of don't want to see any more than 54. You don't want to see it back up here again, and you lean on this. In terms of your risk, if you're selling 50 and 51s, you're only risking sort of 3s, 4s at the most, and you won't get heat. And this is the nice thing about a trade like this, understanding what's happening, is you've got longs loaded. Longs are expecting one of these things. Longs are expecting it to get out of these highs and move higher. It just failed on them, and it did it quite quickly. If you look at the ticks through, it barely did anything there, any flipping, and it shifted right on through this. And then you're just going to lean on that. You want it to trade under that. And you're looking at this in terms of what happened here. I mean, this is historical, but this is order flow trading. This is reading the market. This is not buying. If you think, oh, it's buying, we were on an uptrend, let's buy it. No, the sellers have been whipping this since 54. And they whipped it all the way through 14 at 42. 42's here, so basically you had that and they're back onto the gun again. You're just writing these big numbers. Like I said here, you won't get so much skew in the book. You'll get it a little bit, but it's not like the bund. But you're just trading, again, that side that's controlling. You're looking for a number on the turn. You're looking to lean on the volume once it gets out and fails. It's just a good trade. You'll take no heat. You're not seeing my cursor. Okay, Rhoda, Don. Can you see it now, Don? No, okay. Change. I'll just put screen 2 on. I'll see if that refreshes at your end. Is that any better, Don? Don't know if anyone else is having that problem. I can see it. Okay. Okay, don't worry, Don. There's a recording of this, so if anything drops out or you guys have tech difficulties with the software, don't worry. So if we clear this now, look, in terms of where we are, we'll clear this, and we're back to the bottom in here. Again, like I said, we're already locking up a little bit here, but we're still off the ticks. It's not something you're going to jump or get rid of your, see, 1,067. They're still moving it lower. Be patient with the trade. You'll see this lighten up, and then they'll start hitting this, and it'll be a two-way trade, but you can see it's still ticking off. And it takes a while to turn. Even this here, if you were long up through here to 30.55 and it started tracking 2, 3, 4 tick, there's plenty of time for you to make a decision to take a profit on your longs and to get short. The market gives you plenty of time. You don't need to be worried you're going to miss something. See, we're starting to do some volume there now. Good one, Xavier. Yeah, I saw the ES. I'll pull that across in a minute, and I'll show the guys because it's exactly it's an exact same trade. It's just a nice trade, and all I'm doing, like I said, it's not pattern. I mean, Xavier sent me emails, and he's traded this live. It's just a good trade. It works. You get reaction. It's happening for a reason. Like I said, don't ever get something and say there's a pattern. I'll trade the pattern. No, understand why. Because once you understand the why, your confidence just goes through the roof. You can hold it for longer. And like I said, this has just been breaking down. You can see before I cleared this, they hit this at 42 with massive selling. It's just a good edge there. You're just moving on leg. You know, you're on tilt. It's moving lower, 40. There's just plenty there if you just stay with it. Take good quality trades. You're just taking the chunk out of the leg. That's all you're doing. You don't necessarily have to trade point to point. Like I said, you can touch trade if you wanted to touch trade and thought, you know what, I'm not going to buy it anywhere here, but I'll lay 51, 52s back into here for a move back. I mean, that's possible too. But if you trade touches, make sure you're reading. As soon as you start reading the order flow, am I right, am I right, am I right? Getting ripping the market off. Like I said, you checking your tick highs, what's it doing, what's it doing at 40? Is it heavy or is it just light? And then it ticks on down, is it heavy or is it light? Just keep checking that. Is it going down easy or is it jamming up all the time? Or is it starting to work real, like volatile like this? It'll give you plenty of time to take a profit on a short or to get into a long. I would definitely try and keep to getting on tilt on leg if you can, but basically on leg will start everything. If you get a lock and then you start working the leg, then you can get on a major tilt and keep working 2 or 3 legs. I mean, you got them here, it's ticking off. It's ticking off the highs. You can kind of see it. Then through here we saw it. They were hitting it again, selling it, still off ticks. Just follow the market off. This is reality. This is now. You're not, when you're doing this, you're not actually looking at the daily chart or the profile from that's been built from, you know, a month or 4 days ago's value area, or it's nothing to do with any of that. You're just trading reactions now as the market trades. You're you're seeing interaction of buyers and sellers. You're saying, well, what happens when they interact? Where is someone going to be wrong? Is there lean? Where can I get an edge in here if the buyers are wrong? Where can I get an edge? What do I need to see to get this going short and maybe in it? If you have a look at the bun quickly, you can kind of see it's still skewed. There's a 10.5 there, 8, and it's been driving higher volume. It did about 1,000 at 24. There's still buyers in the bun pushing this higher, and the stocks is off, but it's caught a bit of a bid in the stocks. But if you see what's going through now, 26.5 at 35, they're still selling there. It's kind of something, well, I don't want to buy it. I'm not trying to pick a bottom here for this to push out when I see this. If you have to, like I said, just clear it off. Just clear everything in there. Not much on the tick backs after that huge volume. See what it can and can't get done. It won't do 33s, it'll do 44s. Not necessarily a reversal. We're still pushing down, but we're starting to work this leg long side. That's where the risk is now. For tilt, we're on a negative tilt. We're taking out lows. It's just breaking down, but like I said, this is shifting out from here based on ticks. What it's doing on the tick backs, there's risk that it wants to go long side. Okay, it looks like we've got Den back. Good trade, Xavier. Anyway, on the ES, yeah, it's done the same thing. It's just a really good sell up there at 12 halves. You can see edge in there at around 12 halves. You would have got it leaning, breaking down. It really clustered on the ES. It locked up on the stocks here, as you can see. And then it's just traded off. You're just working all the sell side. There's no reason to get it. If you've got a 51.50, just keep working the sell side as it breaks down. You're leveraging that leg. If you leverage the leg, you can make a hell of a lot of returns, and you can only take one of these. If you just took one of these a day and just be patient, you don't need to fire off like a machine gun all the time. Just work out what's happening. Where's someone going to get caught? What can I lean on? If I want to get short, what can I lean on? See on the ES now, it's 317, 642s. We're knocking backs. We're doing. It's kind of shifting out, and it's doing the volume on the top side. There's no skew in the book. 12s, 12.5s. But the numbers are on. The numbers are hitting the offer, so the buyers are hitting that. So it's not something you can go and start selling now. You know what I mean? It's the buyers sort of are pushing this off. Might be guys taking profit on this a little bit. It's not a bad area to get long when you think it's washed these swing lows off. So it's possible you get a reversal. Like I said, just even in this, you saw the lean. There's lean in this here. You can see it wanting to sort of the top side. So if you're sitting there and you're shorting this and you refuse to take profit because you want it down to 28 and that's your TP and you're not seeing this, then you're not really got yourself looped into reality. You're in fantasy land, like most retail traders. That's what they do, and that's what you want to avoid. You want to avoid getting yourself trapped into fantasy land and setting the market in a nice little neat box, because it doesn't do it. Like I said, there was lean in here. It did a 31 out pretty quick and started doing volume at the top. It went 34s, wouldn't do 33s, 32s anymore. And then once it got on top, it just kept flipping out off top. It's a one tick there, quite volatile. Straight up through all the numbers. If you can't take some ticks out of this just based on order flow, you don't even need to stop. It's just the way it's going. It's going to feed on out. If you flipped and got filled 36s and 37s, you already can. It's doing 41s now, 12.53. It's just in front of your eyeballs. You don't. This is not hindsight trading. This is basically. I mean, if you're working this, you can see lean. You got lean. You're working the leg now. You're kind of off tilt, but it doesn't matter. This could do one of these and we'll end up here. You just don't know. You follow the market around. Just follow the thing around. Okay, Xavier on the S. After the up move, there was some volume around. Yeah, 12. Yeah, failed auction. Exactly. Once it gets under that failure, you're fine. You lean on that. You lean on that volume from the failure, and then you get the unwind from any late longs up there, and then you'll get profiting from guys that actually took longs in the right spot. They'll profit, and you get that drive down from there. So it's just a good solid sell. I'll just clear. No worries, Ed Bandit. You're in the US, so you're having a good excuse. We're on the stocks at the moment. We talked about the bund. For any guys that come in late, that didn't get the beginning. Like I said, this is an educational webinar. We started off on the bund and explaining how I work the bund, what I look at, and now we're just going through basically scalping, more actively scalping, and that second method that I use just to scalp and follow prices, just track the market tick for tick. I'll pull over screen 3, and this is the ES basically, and we'll see the exact same thing. Like I said, if you don't like the stocks, it's a Eurex instrument. If you're an ES trader and that's all you hawk at and you look at, then you can absolutely pull the stocks up and the ES up and trade the ES in the London session. That's not a problem. Trading the ES in the stock session, there's volume there. You'll get fills. So I'll pull that across, show the ES. So again, to go over it, I mean, and this has got all the data. This has got all the data from 13 halves. Went, yeah, basically. What have we got there? 7 3/4 or 7 quarters. Basically from here. So all this data on here at the moment is basically from here. It's when I loaded it. I haven't refreshed any of this. This is just how it's traded, those numbers. So in terms of see the volume there, it's not massive, but you can definitely see control 233 guys just hitting quarters, 11s. That's this size hitting through there. And in terms of what's here, there's only 200, 100s. You'll get your fills if you like I said. I mean, you guys probably aren't trading 100, 200s a clip, so that's not a problem getting a fill on 5 contracts or 10 or whatever you guys size you're working. Exactly the same thing. So basically it locked up here, and then I mean even this in itself, I'll just clear it. This trade in itself is decent. If you look at the buyers are working this bottom, it's locked up, and then we're kind of on this lockup, we're leaning high side. We came back and limited 8.5. So that's a good long based just purely that we're out of this volume and we're going to push. And it would appear that you're off tilt. You're kind of working lower to flat, but that's not a problem. As long as you get your leg right and you work your numbers out from here. If you look at 8.25, there was a lot of volume in here. So there's a lot of two-way trade just on here, eight quarters. So right in here, there's a lot of volume going on there. So you're out on top of that. You're out on top of that. You had the bottom of the profile. There wasn't much risk. So once you saw it popping out, coming back, you can load limits in there. You can hit market. You're just looking for it, for the numbers. Obviously, these numbers now are going to be stuffed around because you've traded back through there. And these numbers are foul, but these are fine. These are fine. So in terms of chasing this up, you're not going to kind of know reliably what happened, but this leg down you can, working down the market up to around 10. It was just a good trade. Or just mark your, just same thing, just what it can do, tick lows, ticking back, nothing. Okay, that's good. What's it? What are they hitting? Are they hitting the offer with size? Yes, they are. Keep working it. Mark your tick low. Okay, 9.5. I don't want that to break. What are they doing? Okay, they keep moving. Just keep working with the trade. Can I add on? Yes, I can. It locked up there. Then it got outside here and came back to that lockup. You can lay limits in there, 10.5, 10.75. You're just working the limit lane. Don't chase out and hit 11.5. Why bother? There's no point. I mean, once it goes out of here, you may have to pay market because it'll do so volatile, but maybe go one market and lay the other limit. If you're working, like I said, it's better to work multiple contracts. Try and get 2 parcels in, 3, 4, it doesn't matter, but work multiples. And then up here, with all these longs, this market here gave you plenty of time to liquidate. It was only the snoozers, the guys in fantasy land that was expecting more long side. They got a bit dreamy about it all and got greedy. They would lose any profits on this leg because they're not paying attention to what's going on up here in terms of the order flow, in terms of the numbers, in terms of lean, in terms of, oh, it's failing here. We've got volume, we're trading. Now we start to trading under the volume. If you look at 12 halves, you can see it there. The 12 halves, 12.75, 12 half, 12.75. That's the volume. Once you start to trade, you can see the guys there, what they're trying to do, and this is a clear sign of a professional controlling, getting this bus moving. If you look here, see here it trades right out below. You can hit 12.5 and you'll probably get paid anyway. You might take some heat if it comes back or ticks up. I mean, you could take 12, take some heat, and if it ticks up, you might go 12.5. You might. So it's not ideal, but you probably have the trade work out based purely upon loading at the top here. It's just a loaded gun. It'll need to unwind. But you can see this bar here. This is a 3-tick bar. That's professional, 12.5. He's just slugging that down from there. He's pushing that down. He's getting good sales in 12.5, 12 quarter. And you can see on any tick backs, they flog it. Come back tick backs, they flog it. That's how the professional works. He's going to sit there controlling that market as it goes up and get some buyers, and they might only buy light, but as they let it, and then they just smash it down with 1-200. And they'll keep working that, but once you get under this, you can lean on that. Once you're under, you sell it and you lean on this, but you always look at the DOM. Always look at the tape, what's going through. Am I getting size with me? Yes, I am. What are the tick backs? They're nothing. This is good. Keep monitoring that. And like I said, in terms of lean, I'll have to pull this chart across, like I said. 11s, what were we, 13s? I have to come down a little bit. And I'm talking about this area here. So we're looking for lean. What I mean by lean, you're looking for something to tell you that something's not right. We've locked up, there's something amiss. Guys that are long, can I take advantage and try and get early legs on the leg down? I realise I'm off tilt, but I can get on leg, and then we can work a new tilt. If you see through here, And like I said, you're trading not pattern, you're trading in an understanding of what the situation, where the risk is for either party. You see it locked up there, traded volume, that's obviously something telling you, oh, okay, there's two-way, there's buyers and sellers, this is two-way trade. It's just stopped. If there was no sellers, this would keep going through to 15, 17 and whatever. Then you had a brief poke out the high, then suddenly you're back to these 12.5 lows. That for me isn't a good sign. And then next it moves out of here, okay, we get this going again, but instead of doing 13.5s and beyond, we only do 13 quarters. We don't spend a lot of time. In fact, we went from 12 3/4 to 12.5. So as we ticked on lower prices, we did it very quickly. Then we had this one that just went good, went very quick off. So suddenly you're onto that. You know that volume, you have a block through here. You're going to now lean on that. That's basically your risk block. Just mark that off. You can see if you can get 12.5. You probably would have gotten them. You might have had to hit 12 quarters. I don't know what Xavier got. He's probably put that in the chat box. I'll have a look in a minute. And then you just limit lane. You can kind of tell the right side. It's just very quick through prices. It's nice to see this type of thing. It's just trading through prices very quickly. The tick highs are off. You'll probably find that they're slugging it with volume, slugging it with size through there. It just works. It works. And you're not worried about, like I said, where do I stop this? Where's it going to stop? Where's the reversal? That's irrelevant. You're looking at reading the market. This is where your eyes are. You're not seeing how many ticks you are up. Once you get entries 12 halves and quarters, the game's over. Then you should be just monitoring what's happening in terms of size, what you need to see. That's all. Are we seeing breaking down? Yes. And like I said, Xavier sent me an email with 2 trades the other day applying information, and he's done it again today. And like I said, you only need one of these trades a day, and you leverage that move, and it will pay you. Like I said, I've been working this type of thing for years, and it just works, and it's never going to run out because I'm basing what I'm doing off a very good understanding of how the market works, the microstructure, its participants, how they interact, what happens when one side gets it wrong, where's the risk. I understand volume and all of these things. And you use all of these components to make good low-risk trades. I mean, these trades you should take no heat. I'll explain something for a second. If you have a volume area here, like I said, all the way through, and you can see that we're starting to tick off, and now we're underneath it. A bit of volatility there. If you get 12.5 limit filled, you might hit market there with another one. You don't want to see it through 13. That's your ceiling. That's a half a point. If you look at what you actually got on that trade, I don't know where it went to, but it's trading 8 quarters now. That's 4 points. 4 points for half a point risk. I mean, it's just so tight. You're keeping this tight, and the beauty with this, you can keep it tight and take no heat. You shouldn't take any heat, really, because once you get the buyers having to unwind from this, then it goes nice and quick for you. It'll go very quick through there with some solid selling. And I mean, this is just London. You go through the cash market, and there's some size that'll just get hit on here with nothing barely ticking back. I mean, it's just obvious. But that's reading order flow and structure at the same time, seeing if you can get a lean. Is there any telltale somewhere? And like I said, you can look at this, the stocks and the bund, and you can work them all together to get reversals like this, to add weight to your argument. And these happen all the time. I mean, it's not like, oh well, if I miss this one, it won't come along until next week, or this. We're just scalping off a tick chart. It happens all the time. Like on here, there was a lockup. I'll shift this across. Oh, too far. If you look at this lockup here, we're back to these lows, so obviously that's going to be an area where you would watch. See the size hitting up through here, 169. They're just a decent size. I'll just clear all this now. Same thing again. You can see they're doing volume in here. What you're doing is saying, well, they were here before. The guys would say support, I'll buy it, but it's much nicer knowing, well, is it going to hold or is it going to do one of these things? What do I need to see to give myself some confidence? And this is why I use this guy here. And basically, I'm just finding lean. What way do they kind of want to go? You can see it. It did a cluster there. Then it kind of didn't want to do it at all. And then this one, it wouldn't even go 7 3/4. It barely wanted to do an 8. And then it stopped here. And then it was here. And if you're selling that or you hadn't got rid of your sells from here, then I don't know what the problem is. You're not really trading market feedback. You're maybe off with the fairies or something else. But it was clearly showing you we're popping out from here. And the lean was there. It would have had size on this side working it out. But even on that alone, if you thought I'll buy 8.5s, you've got no risk. You're with the lean, you're trying to get on leg, you're off tilt, but you're on leg. And 8.5 went 9.5. I don't know what size now. It's done. Oh, it did 9 3/4, so you probably would have got a fill there. But that's a point. That's a point with you're not barely ever taking any heat. And then we bounce, and then we actually come back to this area again. And all it is a measuring. If you think, well, this volume, this is a low here, there's a volume cluster here, there was buyers here before, we're back here again. What do I need to see for me to buy this again? Maybe we could keep pushing out from this area. So what I'm basically doing is just trading reality. I'm trading tick for tick. But you can always get yourself on the right side of the market. You can see here, this bar here, and it's just a bar. Guys say, oh, I get one of these bars, I'll sell it. But if you understand what's actually happening here, it's much nicer to say, well, I know why they're selling it. They're just limiting or they're slamming down the upticks because we've had the breakdown. I mean, they did it here. It's the same looking bar. They look exactly the same. But you can see the strength behind the move. They're just slamming this down. Any ticks higher, they'll hit it. And again, there's just enough proof there. I mean, it's been going long. So that's that trade, basically. But that's just pure scalping. You can scalp a lot in there. You can, once you get good, you'll feel the market which way it wants to go. You'll see the volume. You'll kind of jump in. You can take half a point, 3/4, a point. You can take them anywhere. But what I'm saying to start with is just nice trades that, like in terms of, I mean, you can look at this and say, well, that's all hindsight, but it just works real time. I know it works real time because I use the silly thing. See how we get a lock up here? We're on top of here. You would expect this to move off the top. But see on here, you're getting lean. The tick highs are off. Then you start to get these knockdown bars again. That's done 9s to 7.5s. And you're back to an area here. You could see that they were bidding it off here before. I push it down. I take a contract off here. I let it run. You might have got stopped out, and then you might have adjusted yourself on this. The sheer fact that we've locked up on support, now we're trading on top of the two-way trade. I lean on this, and now we're out. You can constantly going long, short. Where's my risk? Where can I get in? Where's the lean? What are the best prices I can do so I don't take any heat? And I barely can, if the market does shift on me, I'm going to lose, half a point, 3/4 at the most. I mean, like I said, you should not lose any more than a point on these in terms of getting stopped. And that's the beauty with them. But most of the time, if you're understanding, you're reading what's happening, you'll get quite good at reading the market. So I'll just pull up the chat box. I don't know if there's any questions. I had to take that down for a second. So I'll just shift this over here. I think Xavier's popped up a chart there. Yeah. Yeah, good trade, Xavier. You're just moving with it. You're not getting greedy. You're working back to volume. You can keep runners on. You can leverage the moves provided you kind of know what's going on. Okay, you got Martz. He's got a question there. Due to time zone, would it be okay to discuss the euro? I understand if you want to give him his, since it is thin product. Yeah, I can discuss. I'll pull up a chart of that. And a DOM. No, that's not a problem. It's like I said, it's a little bit of a different trade using different techniques, and it's just purely based upon one, the participants, and two, the volume. They're two variables that change the way you trade something. You have to change your techniques. So I'll pull that up. Let me see. I know what I'll do is I'll just change it to the stock screen. We're onto the bun screen, so I'll just do that, and I'll pull up some euro on some other screens. And we'll have a look at maybe a thinner instrument and then the problems that you'll... Does everyone get that kind of trade, that yeah, that trade I just discussed for sort of trading the ES or the stocks? You can trade it using anything. It's the principle. You're just trading a reaction of something. Oh, sorry, Benny, you might be in the wrong room there. Benny's put a question. When you say it's lean on the lows, you mean slim. I mean lean by it's giving a tell. It's leaning a certain way. Like I said, I'll shift back to the ES. If you take in here, Benny, and in this high, you'll see it lean. And like I said, you're just weighing up, and this is why I have the one tick range. I'm just trying to get a feel of the tell somewhere. Or even if we'll just work out off the latest low. If you see in here we're back to the low, and you might think, well, it'd be a nice buy back here. We come back, we'll just see what happens. Suddenly you're watching these ticks. You're seeing the tick backs, and it's just basically these ones. You can kind of see it leaning. I'm just watching what it's doing. If you have a look at this, I mean, this is all wrong now. But if you were to take where are we, 8s? If you were to take these back down here and see what happened when we did 8 3/4, 8 1/2, and then when it went from 8 1/4 and it ticked 8s, what it actually print in 8s? Would it be like 2? Or would it be 500 or something? And then you see it flick back out with nothing traded here, and then they slammed 8 1/4, and then they slammed 8 1/2. Suddenly, with those two, reading the tape and seeing the ticks shifting out, same highs, 8 3/4, and it can't do lower prices, clustering up, suddenly we get on top, and then we're shifting out. It's just a great little scalp trade. That's what I mean by lean. It'll give a little tell. It tells you. I mean, it's obvious. You just got to look at it. It would have done the same thing here. And like I said, I'll just clear that and go back up there. But that's all I mean by lean, Benny. Yeah, like a heads up, exactly. Yeah, Mark, that's the thing. That's why I feel sometimes I repeat myself, but this is good, that you can get it right into your system and your understanding. You're basically leaning on the volume and on this volume traded, and it's just failing. And you're seeing with the ticks and also with the order flow, you'll see it leaning one side. It'll give you a telltale. What you can sometimes do, and it's a classic thing you see in the psych books. They talk about dealing with uncertainty. Kind of like you want to know what's going to happen next, if it's going to go long. You don't need to, and this is the thing. If you're looking at the market in these terms, you don't need to know what happens next, because you'll make money if you're looking at the right things. And like I said, in terms of ticks, in terms of what's happening on this jigsaw tools here on the DOM, that's just the raw market. He's telling you. He told you here it was going to reverse. He told you here it was going to come down. He told you here it was going to go like this. People just don't listen. There's just these generalizations. Oh, here's a top, let's sell it, or here's a double bottom, or do this, or my moving average is underneath, so I'll buy it. That's not really reading them. That's just dealing with other elements that aren't really the market. That's just stuff that we decide that we want to put on there. I got in loops for years, but the moment you get yourself into this reality and you put yourself in the opportunity flow and you manage risk, then 99.9% of the time you'll have everything under control, complete control. And I don't know who said it before. I think Johnny B may have said that this is kind of illuminating. You kind of get a feel good because you always seem to be on market. You don't need to worry about anything, where it's going to go, what it's going to do, where it'll be tomorrow. You don't need to know any of that. Where it's going to stop, it's irrelevant. The point is, where's it going now? Where's the risk? Where's it shifted to? What price can I get? I can get it, and then just monitor it. Don't mind. Thanks, Don. Yeah. Okay, I was going to pull up a Euro chart just to explain some thinner instruments, and why they're a little bit difficult to trade. I'll put back on the bun screen. I'll keep it clean. It's an educational. So just bear with me for a moment, guys. So obviously you're trading this a little bit differently. I'll just pull up. I'll just make this roughly the same. So you're looking at the bun there at the moment. We can see it's kind of traded off the highs. It's been pretty clean down off 28, so that's just all seller with light buying. Still skewed a little bit, but fairly even. So you'll see that when I have the euro, my charts aren't the same. In terms of ticks, I'll have a raw tick chart, but the 3 I don't have. I change that. I'll just be there in a moment, guys. Yeah, maybe. So I'll switch over to the so this is the 6E. You can kind of tell in terms of depth. It's a little bit thinner. Most of the time, what will happen? What I do with this one, it doesn't really matter, but it's more of that failure thing, and you're still using a cluster. If you see that as the top, you can obviously see it's moving out 1, 2. We're shifting out. Once you get outside of these clusters, you can keep pushing out in that same direction. That's how basically I trade it. But if you can see this, it's quite difficult. It's going point. See this? We had a cluster, pop, and then a failure. So a 30-40 is a decent short once you get under here. Clusters up, start trading off the bottom, 26. You kind of see the same techniques. You're leaning on these guys and you're just seeing where the risk is. I mean, obviously, if you set this, it's going to go higher. I buy a 38.44, then it starts trading a 40. Then you want to stop reverse because you're out underneath. But you also got to understand that the tilt's off. You should be trying. It's just a decent trade to get underneath it and sell it down with tilt. And this is a 5-tick. This is a 5-tick chart. You can kind of see your highs, and then we started to kind of trade off, breaking lows. We're through this. So that's basically, you can use the same technique, and again, you're just seeing what's going through here, but it's more slippery. It's a lot more slippery. You'll find it's not as nice. It's not so supported, I guess you could say, that the whole trade idea. But it has the same premise. It's just more slippery. I find currencies a hard trade. Like, I trade spot for many years, and I find it's more of a, if you want to trade currencies, like you look at the Bank of Japan and what they tried to do with the yen devaluation, that's just a good thought out trade. You just know to sell Japanese yen, and that went on for quite some time, and you make good money just off the back of that. You just pull same thing, pull your tick chart up, pull the jigsaw chart up, and just ride the back of that whole yen devaluation trade. You'll have them in currencies every now and again where something will just make sense in terms of macro, in terms of fundamental, and you trade that. I find currencies are better done that way, rather than trying to trade this slipperiness. Yeah, so that's currencies for me. There's a lot of manipulation too in currencies, a lot of two-way flow, and like I said, in terms of what's happening with currencies, sometimes stuff doesn't make sense. You wonder how the euro can be so high, and then suddenly, yeah, stuff doesn't make sense with it sometimes, and it's frustrating. You're trying to, say, sell euro based on deflation and a few other things, and the trade doesn't bite. Then you get the US and the Fed, they do something, and there's a lot can get in the way of a currency trade. Okay, we've got a question there from Terence. So for the 6E, what would be the behaviour be like in the order book, for example, those behaviours that are available in the bund? Yeah, it's very, in terms of what you can see, even if you see this, Terence, you got 5 deep. You can't even see 15 out of where there's any heavy limits or anyone sitting there, or it's two-way there, so it's very hidden, but you can kind of see in terms of volume, absolutely, you can see heavier hitters stepping in at levels. I mean, we're just sitting here, it's 11 o'clock. So you want to be looking at these numbers, your deltas, any heavily traded level. And it's the same principle. What's it doing on the tickbacks? What's the volatility like? There's a lot of, you'll see a lot of stop hunting in this with the wide volatility. They'll just take highs and lows out. It's a very easy game to play because it's so thin. Because it's, I mean, you can come in here with a bit of money. It's not like, there, let's go move the ES around, or let's go move the bund around a lot, and it just won't happen. But you know, you look at 100s here, and what's moving this around? 14s, 3s, 2s, 70s. What? It's gone 5, and it's barely done anything. That's why it's very difficult to make a trade on it. So that's in terms of order book. You're not really going to see it like you would the bund Terrence. That's what I'm saying. You can't wander over here to the 6E and say, okay, what's heavier, what's lighter? It doesn't work. Like it would appear now at 667, 700, 567s. It's heavier top to side, but it's been moving higher. But that might even up in 2 seconds, and it's irrelevant. You're not going to see something like the bund, that order book anomaly, picking up that nuance. It just won't happen. So you can throw that one in the bin. You're basically just trading off feel, the size that they're doing. Like I said, there could be a lot of effort to sell something and just not going anywhere. So in terms of delta, you get a failure. These are really good, and it comes back to what's happening here. Like a lot of people would say that's a pattern, it's just a failure, but it's a sell. There's buyers here expecting a lift, and when this goes under, they're just going to, they'll liquidate. You already know it's a negative tilter. So once you get that negative tilt, if you try and get a failure, or you try and get on leg, that's kind of what you want to do, and you just want to see, like I said, slamming into this bid, moving it down. You're obviously not going to see the same numbers as the bund or the ES, but same principles apply, really. And with this, you get a high, it's moving on down, suddenly it moves up over it. You can kind of lean on that a little bit. It's low risk. You can kind of go 48, and once it gets back to 46, it's 44. You're kind of maybe looking for a few pips loss or ticks loss, and or trying to get a scratch. But again, it's just measuring the market. You're just doing a bit of the tick high, tick lows. You can kind of see it's a decent trade. It's very bid there. It's bid here. It's pushing out. Once you get on top, you can lean on this. You can it flipped 48.50s a few times, and it just released. It's a decent trade on the back of this, considering you are moving out, and then you're just following this. But you can get a lot of this garbage too. But don't forget, that's Asia. That's Asia. It's pretty nasty. And then you get 8 o'clock. So here somewhere it starts to open up, and then into London, 9 o'clock. So that's how I would trade, looking for the same techniques. And I'm always keeping in mind the stops. Always keep in mind on where the liquidity is if they decide to go after it. And this is the danger ever with trading. If you see that and you say I'll sell in here, they'll kind of always, and you get a 39. There may have been an option there, and guys protecting the option, and there's stops beyond, and they wash them out. It's a decent trade even based on that. You can kind of see when they're going for stops that are being protected. They just kind of don't give it up. They kind of just want to take that out. There's some sites that'll give you where these options are. I know if IFR does a service that will tell you in SpotFX where they are. But you can tell the way it's trading. You'll be able to tell on the ticks, like it just doesn't want to go down before they take 39 out and then get those stops. And there's a trade in there even. Obviously, again, looking at the jigsaw, the DOM, to see what's traded in there. You don't want to flush up through it. It could go 39 to 39.50 in a few hours. So you just want to see for failure. Once you get a failure, you get an edge. I mean, there's 20 ticks in there. And then it starts ticking off. Then you're off. Then you get sellers back into this volume here. Then you're kind of working down. Then you get a cluster. Then you're underneath, so you can make some more underneath with tilt. You can kind of see lean in there. You might see more selling on here, pushing it through. You might take another 5. You're just taking bits and pieces out of the market where it makes sense. I mean, there's no harm even using technicals. A lot of guys will say there's something through there. We're just on the back. It's a sim trade. You've had an impulse leg all the way through. It's pretty positive. And then you're on the back of this, which was that volume there before, and you push off out. You can use simple technicals. There's no right or wrong answer here. I'm just talking more. Yeah, we're opening it up to more volatile, less volume traded instruments here. I'm not talking about Bund and really picking up nonce in the order book and order flow. Just working out off the structure a little bit, buyers and sellers, where they're interacting, where's the risk, where's it been going, where can I get in, and then watching the jigsaw tools. So if that answers your question, Terence, the less volume that's traded, the harder it becomes to try and trade. I mean, if you're in a long down here somewhere and you're seeing stuff like this and nothing ticking back, I mean, you just keep with your longs at 128 until you see a little bit of problems in here. So, okay, no worries. But even in terms of applying those principles on those microstructures, the tick charts with lean, you've only got to look in this section. It's been capped, but we're leaning. In here, the euro wanted to go up. You can kind of see it already. If you've got a short and you've been shorting this and you shorted here and you shorted, and you're not really looking at this, you're just dreaming about the plus 100 pips you're going to make when it gets to here, but it never does because you get stopped out. This is what we're saying here. Cut that nonsense out. Just be glued into what's happening. Point. What are we doing here? Where's it shifting? There was easy enough. This is a 5-tick chart, 5-tick range. You could see it shifting out already. So you could even take a few tickle longs and see if we can wash these stops out and just liquidate in the back of the stops. I mean, you could do 72, 82s plus 10. This is just a simple trade. You're just applying the principles a professional would use, but you've got your eyes open. You're seeing a market shifting a certain direction. It's leaning. You're picking up on that. Like this again. Even in these lows here, there was lean. It's ticking off. You can kind of see, and we're already pushing up. We're on the back of this. We've got volume. You can even add once you get out the top, scalp out 5, 4s. Doesn't matter, it all adds up. You're finding edge somewhere. It's finding edge. Where can I get edge with very little risk? What can I lean on? It's that whole process of thinking it out in terms of where you want to get in, what can I get done, what can I lean on with very little risk, very little heat. That's this principle that I'm showing here, but it's different to the bund trade or something like that, where you actually, and it's more of a, I guess, a specialist market. If you head on over to Pork Bellies or something, you might see stuff that that I wouldn't if you've been trading that for a long time. Yeah, but it's unexciting. This is just trading. This is just trading order flow and structure. Just trying to get on the right side of trade always. There is a right side. The market shows you, but people just don't. They're not glued into this. They're more worried about, oh, here's where I want to sell it, and this is a double bottom, and there's something here, and this is where I want to take profit. And yeah, but what's the market doing now, right here? What is it trying to do? Where are people? Where do I want to get in? Where's my risk? What's this saying about the whole situation? is what I'm expecting going to play out, or am I just fantasizing about what I want? There's a huge difference, and once you get yourself into reality, trading reality of what's actually happening, seeing shifts, seeing the lean, going with order flow, if you don't trade like that, you won't make any money. It's just, you're just dreaming. And use the profile a lot too. Like I said, this is the 6E. You'll find profiles on crude and DAX and these volatiles. They'll be like this all day. It'll be very hard. You'll get a bun profile. It'll be very nice. Same with something like the ZB. Just those big fat thick markets, they'll have very nice profiles you can trade off. But these you'll get levels where you can sort of take a little bit of a trade off. 16s. What have we got there? No, 18s. There's a little bit of a level at 18 if you want to buy it. So using the profile to always keep in mind what's happening there. So has anyone got any more questions? Anything else they want answered? We're basically about 40 minutes out of European lunch. So just type them in the chat box if you have any more questions, anything you want answered. So going on from today, this was an educational, and tomorrow will be live trading actual market, and applying these same principles, talking a little bit about and then talking through the trades as I take them. They could be on the bun, they could be on ES or the stocks, but we'll have live positions on. Yeah, we can do a follow-up if anyone's got any questions, or you're quite welcome to email me if you're struggling with a few things or you want any clarification. I don't mind. I don't mind if you're a member to the room. It's a service. It's part of the service. I don't mind providing, as long as you are a member and you're not sort of looking to write me something terrible. It is a lot of work, but like I said, it's part of the service if you're a live trade room client. So I'll put my email in the chat box if you want to. Yeah, any questions you have. Yeah, absolutely, Mark. Yeah. So what I'll do, guys, it's basically the same time tomorrow, and as I said, live trading. But I'll wrap the webinar up. I appreciate you guys sitting in, and also the questions, the light participation. I hope you've learned some things, but more importantly, basically, the road to profitability is looking at the market for what it is, basically, and trading it in a fluid way. So you're changing what you do when he changes, and not getting emotional about it. You don't need to. Just read the market for what it is, staying tuned into order flow, tracking how the market's trading with regards to structure, and but that's basically what the room is all about. So again, I appreciate it. Thanks to Pete too. The great tools, Jigsaw. They're really priceless. They're really invaluable. I couldn't imagine, if you just look at a chart without the DOM, it's a little bit ridiculous. We've had discussions before. It's just really silly to do it without it. It's madness. But anyway, I'll wrap the webinar up. Appreciate everything, and we'll make this available, and that you can review it anytime then. Thank you very much, guys.